This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on that internet thing. I think it's youtube.com. Head over there, search Bloomberg Podcast, and that's where you'll find us. Tom Keene is off today. I did not get the memo. So we went deep into the bullpen, pulled out this guy. He used to be a player. David Gura comes back, and we appreciate getting a few hours.
It's been a while. I think years.
Yeah, because you had that seat for a while with Tom. How long were you with Tom?
I survived at least a year. I think a year and a half. But I will try to recapture some of that zeitgeist.
Some of the magic.
Yes.
David Gura,
velocity.
Host of a Bloomberg podcast, The Big Take, joins us for the next 3 hours, sitting in for Tom. That's a good thing. You know, we get some stock routes over in Europe. Just looking at some of the indexes over in Europe, really selling off today, led by the CAC in France, off 2.5%, bleeding over a little bit, I think, David, into the U.S. futures markets here. So we'll keep an eye on that. We got a lot happening here. Neil Grossman in studio with wine. So that is a good thing. We're just going to talk about these markets, see what the heck's going on here. Melissa Otto, host of TMT Research at Visible Alpha. We're going to talk about tech. Are we in a tech bubble here? I don't know. A lot of folks just tell me, shut up and keep buying them. I don't know. It just feels, I was there in the late 1990s, 2000. It doesn't feel anything like that because we actually have real companies, real earnings, real free cash flow. So we'll be talking about that going forward. So a lot happening here. We got UMich data coming up later this morning. Alex Steele and I will break that down at 10 o'clock as well. Right now, let's kind of get a reset here. Take a look at these futures markets. We'll do that with Lisa Mateo.
You got it. And right now, futures, they're falling, pointing to that lower open. This is after all-time highs on Wall Street for the fourth time this week for the S&P 500. We'll start with S&P futures. They're down 0.6%. Dow futures down 0.8%. And we have NASDAQ futures down 0.3%. The two-year yield at 4.69%. That's little change. The yield on the 10-year 4.21%, and that's down 3 basis points. To currencies, the yen weakened past the 158 per dollar mark, and this is as the Bank of Japan had delayed that decision on its bond buying plan. It's now trading at 157.04 against the dollar. To earnings we go. Shares of Adobe, they're higher, up 14%, and this is after a strong outlook. Shares are set for their biggest gain in about 4 years. We'll stick with tech and we'll switch over to Microsoft. Those shares down nearly 1%. The company said it's pulling back that wide release of a new AI feature on its Windows software for PCs. It said it's going to test it out with a smaller group. Meanwhile, Apple, it's now overtaken Microsoft as the world's most valuable company, registered its biggest 3-day advance since August of 2020. Shares are down about 0.5%. That's your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate it. David Gura doing his best to sit in for Tom Keene, as if anybody can. But David Gura will give his best shot. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City to our worldwide audience. David, what are you looking at this morning? What gets your attention?
You know, you brought up what's happening in France, and I think that the ripple effects of that decision by President Macron to call these snap elections continues to kind of roil the continent. So paying close attention to that, how it's playing out in Europe, how it might trickle over the Atlantic to the U.S. As well, and then just kind of exhaling here after a crazy week that day with both the CPI and the Fed.
I like the whole concept of snap elections, though.
Yeah,
it's kind of interesting.
3 weeks, as we trudge through this one to November,
Yes, we go through November. I mean, the snap elections, that kind of has something to me. All right, Neil Grossman, co-founder, former CIO, founder, TKNG Capital, joins us here in studio. He's also owns a vineyard. Where's your vineyard, Neil?
It's in the Millbrook area
upstate New York.
Upstate New York, beautiful.
Hudson Valley, beautiful.
He always comes in bearing a bottle of wine. We appreciate that.
It's not open, I should add. It's
yes,
that's always
not yet.
Now, Carol Master and Tim Stenovic, occasionally in their afternoon Bloomberg Business Week, I'll see bottles open in their studio.
I can attest to that.
That's how they play.
It adds a clarity to the way you
It does. It does. Hey, Neil, we had a bunch of economic data. We just got through an earnings season. What's your view of the world here? I mean, we've got a market selling off a little bit today, but I mean, we've got a market that's S&P 500 up double digits, yields coming in. What do you make of this world we're in?
I'm more on this feels bubblish a little bit. I mean, let's take a look at Apple. I mean, wonderful company, don't get me wrong, but somebody added $300 to $400 billion in value on an announcement that they're going into something. I mean, it's pretty staggering when you think about it. I think when you watch the internals a little bit, the size of the moves of stocks based on a little miss, a little hit, or a little expectation, I don't remember stuff like this very much in the 40 years I've been doing this.
Paul, referring to the Fed meeting this week, and I wonder how you're processing what we heard from the Fed chair, what we saw in the dot plot and the SEP. How are you navigating those data points, and how's that sort of shaping your perspective on the market?
I'm a little lighter than normal right now, I would say. There was one thing I actually heard in Powell's statement, which, is something I think we have even talked about. He made the comment that the annualization of inflation data is going to be very hard to continue to see improvement. I think we're in a range of, let's say, 3.25% to 4.5%. Number one. Number
Inflation?
two, inflation.
Wow.
I'm looking. I use CPI. The PCE and some of the other stuff the Fed uses, to me, is a slice, and I understand somewhat why they like to eliminate a little bit of the volatility of things. But I think the discussions in the large of why people don't feel good is it's the bigger numbers that affect them. And there are a lot of really interesting things. I mean, the cost of insuring things, as you know, the cost of buying cars, some of the food costs, they're pretty staggering. And for the average person, airfares, hotels are off the charts. And so, the concept that maybe you're getting a little bit of a slowing in the rate of growth inflation. Remember, we're still at 3 to 4, 5%, whatever it is, 3.6. I think people are feeling it still, and I think that's one of the issues. I did want to mention something which I've been thinking about. I mean, there's been a lot of talk for the last 2 years, basically, about the inverted yield curve and why it has not lived up to the expectations as an indicator of bad things to come. And I've been spending a lot of time thinking about this. The idea may well be that the inverted yield curve, given the structure of the economy now, is actually stimulative more than not. There are areas of the economy, obviously like real estate, where it hurts. But if you think about it, long-term yields are still relatively low, and corporate America, if it wants to borrow using a 4% base with very tight spreads, long-term borrowing costs are lower. So that's not a negative. Short-term money for the average investor is throwing off tons of yield. But on the other side, the real cost of money, the large borrowing, is coming out of the government of the United States. So they're borrowing at staggering quantities. They're short funding it. And then they're taking that money and it's running through the economy. So I think there are some interesting dynamics which have helped to support the economy a bit. We'll see as it goes right now, but
a lot of folks, Neil, are saying that this Fed is already behind the curve, that they should be cutting now. Are you in that camp?
well, I'm not in that.
No, in that camp.
Look, number one, they again, there's an asymmetry to what they do. One piece of data that looks good, and they've trained the markets to go crazy. 6 months, I mean, we're 6 months or a year from where we were. The economy hasn't slowed. This argument, I know you had Bill Dudley on, who's an old friend of mine, talking about the neutral rate of interest rates. And wherever that falls, and again, I think this goes back to some of the other questions, central bankers, and as you know, I was one for a while, tend to look at the liability side of the economy. They've never really, in my view, fully incorporated the asset side. And I think we are in an asset positive environment. So, and every time the Fed opens its mouth or the market seems to get its expectations up, what happens? Yields, how far have yields fallen in the last couple of days? We're 100 basis points lower in long-term yields in over a year. The dollar starts to weaken. Stocks are throwing off value, and so every time you liquefy, it works against the idea that you're going to get this sort of significant improvement in inflation. So I think we're going to be waiting. The last point is, and I know everyone's talking about September. I think Powell went off on a tangent last year because he was hoping he could get something done before the election. I do not know, unless you get a significant downgrading in this economy, how or a staggering drop in prices, which I don't see. I don't know how in front of this election, given the polarization, that the Fed really, and I know that this is not a political argument per se, but the meeting immediately before a major, what may be one of the most important elections. For them to be doing that, I think is going to be a very difficult thing.
All right, Neil, thanks so much for joining us in studio. Neil Grossman, he is a co-founder, former CIO of TKNG Capital, giving us some thoughts on these markets, on this Federal Reserve. He is a Fed hawk. Let's just be plain and simple here. I tried to tee him up to kind of soften it up a little bit. Nothing happening. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. Leaders of the group of 7 industrialized nations are turning their attention to migration on the second day of their summit. Today, they will discuss ways to combat human trafficking and increase investment in countries from where migrants start out. Yesterday, President Biden and Ukrainian President Volodymyr Zelensky signed a bilateral security agreement between the U.S. and Ukraine. Biden says leaders of the group of 7 have agreed to work out a big loan to help Ukraine in its war against Russia.
This week, the G7 signed a plan to finalize and unlock $50 billion from the proceeds of those frozen assets, to put that money to work for Ukraine. Another reminder to Putin, we're not backing down.
Meanwhile, President Biden's competitor, former President Donald Trump, made his first visit to Capitol Hill since the January 6th riot. He met with lawmakers, including Senate Republican leader Mitch McConnell, who called the meeting entirely positive. The presumptive Republican presidential nominee is also making a big promise to the business community. Trump says he'll cut the corporate tax rate to 20%. Bloomberg's Ed Baxter has the story.
This is a pitch to corporate CEOs, about 100 of them, as well as House Republicans. He said a cut from 21 to 20%. He says it'd be offset by future tariffs. And even a small reduction, of course, means billions of dollars for profitable companies. He also vowed to make permanent the sweeping 2017 tax law. As for the GOP itself, his theme?
We have great unity. We have great common sense. A lot of very smart people in this room and a lot of people that love our country.
Also promised to again slash regulations put on business. Ed Baxter, Bloomberg Radio.
Muslim pilgrims have converged on a vast tent camp in the desert near Mecca, Saudi Arabia, officially beginning the annual Hajj. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. Hey, David, I'm looking at this story, Tesla.
Yes.
You know, investors, I guess they reapproved Elon Musk compensation.
$56 billion.
That's not bad.
No.
I don't have a problem with it. When you talk about athletes or executives, whatever the market will bear is fine with me. The guy's career, he is Tesla. So whatever, I don't know, whatever he wants is fine with me.
This is the argument his supporters have made, that this is what the deal was, and they seemed astronomical, the goals at the beginning. He's met them, and you had shareholders voting in favor of them yesterday. I guess what's interesting to me, Paul, is that they're not, this vote isn't binding. So now you have shareholders backing him in doing this, but of course this stems from this ruling by a Chancery Court judge in Delaware, where Tesla was until yesterday incorporated. Now that incorporation has moved to Texas. But I think the open question here now is, what does that judge do with this, if anything? You have shareholders backing this, but does that mean necessarily that Elon Musk is going to see his wealth rise? I mean, he's fabulously wealthy.
Exactly. I mean, what a lot of shareholders will say is Elon Musk is, kind of the AI story. It's the all that technology. It's all in the guy's head,
and they want to keep him there. I mean, they think he's so closely associated with it. They don't want him to take his hand off the wheel.
Yeah. So I don't have a problem with it. It looks like the shareholders don't, and stock's moving higher. So good for them. S&P, we're off about 0.6% here. We're going to keep an eye on this going forward. This is Bloomberg.
Now, a look at some local headlines making news in the tri-state area. The NYPD continues to search for protesters who caused disruption on a subway train. It comes amid vandalism during several pro-Palestinian demonstrations.
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. To the markets we go, where futures still falling after more records for the S&P 500 yesterday. Right now, the S&P, well, it's down 0.5%. Dow futures down 0.8%. NASDAQ futures down 0.3%. We have the 2-year yield at 4.69%. That's little change. The yield on the 10-year 4.21%, and that is down 3 basis points. Check in with commodities. We have spot gold higher, $2,327 an ounce. Brent crude, $82 a barrel. WTI crude, $78 a barrel. On the economic calendar for today, we get a report on import prices, also a read on sentiment from the University of Michigan, and we'll also hear from Chicago Fed President Austin Goolsbee. All right, heading to Tesla shares, they're up another 0.5%. You talked about this over there, Paul, after shareholders backed Elon Musk's compensation package and for moving the company's state of incorporation to Texas. And we have some news surrounding Visa and MasterCard, a $30 billion swipe fee settlement deal between the two companies and retailers. Well, that could be rejected by a federal judge. You have Visa down about 1%, MasterCard up about 0.5%. And I wish Tom was here for this story, but it looks like Roaring Kitty has exited his options position in GameStop. Keith Gill, he posted this screenshot of his portfolio, no longer included 120,000 call options. Instead, a position of more than 9 million common shares. We have GameStop down 2%. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for TK this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're also streaming. That's the internet, David. YouTube.com.
Appreciate that.
Search for Bloomberg podcast. Tech stocks continue to be the story. I mean, I love when my tech stocks are leading the market. I feel like that's all we've known for the last 10 or 15 years.
This is your bailiwick.
This is it. I'm all in.
Yes.
But I get a little nervous when, like, that's kind of it. There's not that breadth you like to see in the market. But let's talk to a person who's kind of an expert in this stuff. Melissa Otto, head of TMT Research at Visible Alpha. Melissa, what's your tech call these days? Are you comfortable with where these companies are, with where their multiples are, with where their earnings are? How do you think about it?
Thank you. It's a really interesting time right now for the tech stocks. I think what we're seeing is that essentially GARP is kind of worked.
That's growth at a reasonable price for those of us old enough to remember that.
Taking out my pencil.
Yeah,
that's right.
So, stocks that are trading at, say, 20 to 30 times are actually generating decent growth. So when you think about the multiple that they're generating, or the ratio from that, it looks pretty reasonable. So it doesn't seem like it's out of proportion. Just coming out of the WWDC this week, Apple trades at a range of 27 to, say, 32 times based on forward-looking estimates. And I think what we've observed is that, based on Visible Alpha consensus, there is a trajectory getting essentially built into the market that is looking like there could be a really compelling replacement cycle, which I think, essentially took Apple up this week. Yeah. So I think when you think about where the growth trajectory is going and where AI is potentially taking it, the landscape looks really interesting.
That's where I want to go. So you mentioned that Apple Worldwide Developers Conference and the deal that it brokered with OpenAI, and we talk a lot about OpenAI. We talk a lot about NVIDIA as well. So these are the two kind of marquee names. I'm curious sort of how you see that landscape shifting and evening out. So there's so much obvious promise and faith in NVIDIA, for instance. When do we begin to see that sort of trickle down, and sort of what does it look like one level beneath NVIDIA?
NVIDIA is definitely
the lodestar.
Holy mackerel.
Yeah.
Based on Visible Alpha consensus, we see in the data this year, the data center revenues are expected to generate over $100 billion. But looking forward several years, it's going to over 200. $100 billion in revenue growth for one segment is expected in the market. That is astonishing growth. And so, I think when we look at that, it just tells us, wow, there's something interesting coming down the pike, right? And so I think, for Apple, they're sort of the consumer end of that. They're the end user of that. What NVIDIA does is they're essentially building the infrastructure that's enabling all of this generative AI to even happen, to make it so that, users like you and I and organizations can actually have the compute power to do the generative AI things that are so productive and interesting.
So NVIDIA, obviously, I think for most lay people, that is their AI play, even though there's a lot more. On the software side, I hear Microsoft mentioned as a way, if you want exposure to kind of the next wave of technology, whether it's AI or whatever, I called it big data 2 years ago, now it's AI. Microsoft is a story. How do you think about that?
I mean, Microsoft is another monster. And based on Visible Alpha consensus, their Azure cloud business is expected to go from $75 billion and then over the next couple of years to $150 billion. I mean, so between NVIDIA and Microsoft together, you're talking about $175 billion in expected new revenue growth. That's incredible.
We had this news this week, Bloomberg reporting that 2 regulators are looking into Microsoft and NVIDIA when it comes to AI. And I wonder sort of what that tells you, not necessarily about those cases as they might be unfolding, but about where we are in this cycle. Again, we talk about the promise of AI, yet things are moving so quickly. You talk about doubling revenue. It's insane, like in this feed that you're talking about. But then you have news like this, and you wonder sort of what are the things that might slow this down or might bring this to a more normal pace? Is that even likely to happen, do you think?
I mean, it's a question that keeps me up at night.
Yeah.
I'm like, what happens if the consumer just doesn't adopt?
If it doesn't click.
Generative AI idea, it doesn't click. Because I really remember covering Apple back in the day, pre-iPhone, and I remember a lot of us in the investment community debating, is this thing going to take off? Are people going to like these touch screens? Or like there's no keypad? What about the flip phone? Remember those days?
Yes.
And I remember there were 2 really distinct moments when I thought, okay, this thing's going to be huge. The first was when I saw my 1-year-old child taking her finger on an iPad and very intuitively
it is very wild how that happens.
Engaging with this, couldn't walk or talk really, but can engage with an iPad. I was like, wow, this is really interesting. Wow, this could create a whole generation of users that are not really baked into expectations. And the second was my mom, widow and retiree, saying, I think I want to, convert from a flip phone to an iPhone. What do you think? Should I do it? And then it really revolutionizing her life. Things like GPS, text, the way she engages with us and her friends, really making her life a lot more fun and easy. And so if generative AI is able to do that, I think it could be really interesting.
Melissa, 30 seconds left. Amazon. What's your takeaway for Amazon?
Amazon is in a really interesting position right now. I was just actually at the Amazon AWS Financial Services Symposium. There was a lot of discussion around how generative AI is being brought into organizations. And I think the big takeaway from that is that, it's really going to move more to the cloud. Mm-hmm. And companies are really feeling that FOMO trade. And so when I look at the Amazon expectations for the AWS business, we have seen the Visible Alpha consensus numbers for AWS margin go up 120 basis points into Q2. So I think there's some interesting momentum coming in there.
Melissa, thank you so much for joining us. Melissa Otto, she's head of TMT Research at Visible Alpha, getting a little tech discussion this morning. It seems, David, you can't not be there.
No, everyone's talking about it, and I think that contrast is so interesting. I mean, Apple really touting the fact that they're going to do a lot of this AI work on the phone itself, not in the cloud, and so I think that's something definitely to look forward to, sort of how much is done in these data centers and what can the hardware itself do going forward. But as you said, it's everywhere. Yeah. Everyone's talking about it.
Yeah, exactly. And every company in S&P 500, you go through their earnings transcripts, and almost every single
most
company,
often mentioned.
Yes, most often mentioned AI. And you get like McDonald's talking about AI and revolutionizing the drive-through. Then you got something. S&P 500 futures off 0.5%. The Nasdaq off about 0.3%. We got a lot coming up. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a lower open. Dow futures leading the losses down 0.7%. We have S&P futures down 0.4%, and NASDAQ futures down 0.2%. European stocks headed for their worst week since October. Growing concerns over politics over in France. We have the CAC and Paris down nearly 2.5%. The euro fell to its lowest against the dollar since April. That is now at 107.01 against the dollar. To the bond market, we have the 2-year yield 4.69%. That's little change. The yield on the 10-year 4.20%, and that is down 4 basis points. What's moving the markets? That's Adobe up 14% after its results signaled it's part of the AI boom. And you have AI fashion retailer Shopify. They're up about 1%. Evercore raised the company to outperform from inline. And since we're talking shopping, Bloomberg reporting some luxury labels. Well, they're slashing prices up to 50% in China to lure shoppers and unload their unsold inventory. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here on our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to that internet thing and search Bloomberg Podcast. All right, David, you're a worldly guy. Let's talk U.S. sanctions. Let's talk U.S. industrial policy, U.S. protectionism, U.S. monetary policy. Are these good? Are they bad? Are they working? Are they not working? I have no idea. I did pay attention when I was at Duke to some of my economics classes, but I just don't know. Steve Hanke knows. He's professor at Johns Hopkins University. Steve, thanks so much for joining us here. This is an election year, and we're starting to hear a lot more discussion about global industrial policy, U.S. industrial policy. Let's just start with, tariffs. Are tariffs good? Are tariffs / protectionism, are they good? Are they needed, say, for the electrical vehicle market? What do you think?
I think they're terrible.
Oh, boy.
And we just keep getting all the major political players in the game doubling down and proposing even more nutty tariff ideas with each passing day. We had Trump yesterday. He's got some idea. He's going to replace the income tax with revenues from tariffs.
Do we get we don't get revenues from tariffs, do we?
Well, we do get revenues from tariffs, but the revenues are actually a tax that come out of the hide of American consumers and businesses. So that's the tariff thing is really unbelievable because it's part of a larger picture, and sanctions are actually a form of protectionism. This is all really, David, under the umbrella of protectionism. So you have sanctions, and since 2000, the United States has increased the number of sanctions that we put on various individuals and countries by 900%. But it's amazing because scholarly literature shows us that these things don't work. They always end up backfiring, creating a lot of unintended consequences, and the sanctioned countries and individuals always find workarounds one way or another to get out of them. But in the end, when I say they don't work, they usually create what's called a rally around the flag effect that keeps the targeted leaders or elites in countries in the saddle. Vali Nasser, one of my colleagues at Johns Hopkins, an experienced diplomat, Iranian of origin, just did a big study with 3 other colleagues on Iran, and basically the sanctions we put on Iran have really created this rally around the flag effect, because the idea was the U.S. thought, well, we'll put the sanctions on, that'll put a lot of pressure on the middle class, and the middle class in Iran will come to our side. Well, no, the middle class either went to the sidelines or went on the side of the regime because they view those who impose sanctions on them as enemies.
Steve, let me ask you a little bit more about that. And I think it's a rare day when I don't see in my inbox a message from the Treasury Department about a new sanction, particularly with regard to Russia's invasion of Ukraine. And so we have the G7 meetings unfolding now in Italy, and Treasury Secretary Janet Yellen announcing a new raft of sanctions against Russia, I think tied to semiconductors. But you're getting at something I wanted to ask you about, and that is this kind of recent history of the weaponization of sanctions, the Treasury Department, the administration, this and previous ones really relying on them as a tool. I mean, Janet Yellen not shy about saying she thinks these are effective. You talk about Iran. As we pivot to Russia, are they any more effective when there is an actual military war, when you see the kind of ratcheting up that we've seen here in recent years?
The answer is no. If you read all of the scholarly literature, tells exactly the same story, starting in World War I, and that's these almost never achieve their desired objectives. And let me give you one. Let's go back to the 1970s. When the Soviets invaded Afghanistan in 1979. Jimmy Carter was in the White House, of course, and Brzezinski was the national security advisor, and they put a ban on agricultural exports from the U.S. to the Soviet Union. And what happened is what Bob Mundell called the Afghan effect. And that is the Soviets went to Argentina right away and cut a deal for grain. U.S. farmers, of course, were prohibited from sending and exporting grain to the Soviet Union. So the Argentines made out like bandits. The Soviets weren't hurt at all. And ironically, who was in power in Argentina at the time? Well, junta was in power. They were supposedly the bad guys. So this is the kind of law of unintended consequences, this Afghan kind of effect.
I guess we're seeing that now with China. You see that relationship between Russia and China has grown in warmth, shall we say, since the start of that war.
Oh, yeah, absolutely. They're locked at the hip. And it's because of these sanctions, and now we put even further batch of sanctions on, as you indicated, with the G7. So it's just something that doesn't work. But the problem is it's part of this protectionist thing. The public thinks somehow they work. They have the impression that they work, and they become familiar with, they think, sanctions and comfortable with sanctions. So if we're sanctioning somebody, why not put a quota on them or a tariff on them? So you get out into a broader sphere of other kinds of government intervention.
And Steve, David brought up China. I'd love to get your view here, because I think there's a founded concern on many Americans' view about China, whether it's a technology Cold War between China and the West. We're concerned about, TikTok being so pervasive here in the U.S. What do you think the U.S. policy should be about China in terms of trade and just overall relations there? Because there are some significant, I would say, meaningful concerns.
Well, we have a lot of the S&P 500 companies that are very involved in China and deriving considerable profits from China. And as far as I'm concerned, that's a good idea. Trade is always good. Once you start cutting trade off, you increase the chance that you're going to get into a hot war of some sort. And with the current administration, and this started, of course, with Trump and the former administration, we've essentially continued to escalate really what is an open commercial trade war with China, which I think is a very bad policy.
Steve, you mentioned Argentina a moment ago. Maybe I can ask you about what's been going on there lastly. So we were talking about Argentina in the 70s. How about Argentina today? And you have President Milei pushing really hard for this legislation that would make pretty radical changes and cuts to the Argentine economy, as he, I think, is going to Italy to meet with the IMF to try to renegotiate some of that country's debt once again. But we've seen the protests in the street. At the same time, we've seen Parliament in Argentina pass a kind of lighter version of that omnibus bill that was designed to kind of rework the economy there. What's your read on that as you look to that part of the world? Do you see him as making progress despite it all? What's your sense of what Juan Milei is doing in Argentina? Javier Milei is doing?
The passage 2 days ago of that omnibus bill was a big win for Milei. Mm-hmm. It was a squeaker. He barely got passed, but that's a good policy move and a good thing for Milei. His problem is, and his Achilles heel, is that he hasn't delivered on dollarization and getting rid of the central bank. And he campaigned on that promise. He hasn't done it. And as a result, they're really not getting inflation under control, and the peso just keeps sliding. And I think this will make him extremely vulnerable as time passes. He's quite popular right now. If you look at the polls, he's doing pretty well, and the passage of this bill by the Senate 2 days ago certainly was a help. But I think without dollarization, I think the story is going to be pretty much over in Argentina.
All right, Steve.
They have a long history of just not being able to do it. As long as they have that central bank there, it's like a recovering alcoholic with a bottle of whiskey in front of him.
All right. Hey, Steve, thanks so much for joining us. Always appreciate getting your informed thoughts. Steve Hanke, professor of Johns Hopkins University, and of course, a proud graduate of the University of Colorado at Boulder, the Buffs.
All right.
Go Buffs. How about that? With our news in New York City. Here's Michael Barr.
Paul, David, Lisa, leaders of the G7 summit have turned their attention to migration on the second day of the summit. Today, they are discussing ways to combat human trafficking and increase investment in countries where migrants start out. The topics at the three-day summit in Italy also include financial support for Ukraine, the war in Gaza, artificial intelligence, climate change, as well as China's industrial policy and economic security. Still no deal. The U.S. State Department is encouraging Hamas to stop haggling on a proposed ceasefire hostage deal with Israel. State Department spokesman Matthew Miller would not go into details on the sticking points, but dismissed the idea that Hamas should need assurances for a lasting peace.
But at least we would have had a ceasefire. At least we would have had a halt to the suffering. And Hamas didn't do that. Instead, they dragged it out for 12 days, and now there will be continued haggling and a delay in the ceasefire, and that's what we were disappointed in.
Meanwhile, President Biden says he has not lost hope for a ceasefire, but it's going to be tough. The nation's top U.S. aviation regulator says they will be tougher on Boeing. Mike Whitaker admitted to a Senate committee the FAA did not perform as thorough an investigation as they should have. Now, a new investigation is underway involving Boeing 787 Dreamliners after the company admitted hundreds of fuselage fasteners on some undelivered planes may have been improperly installed. Whitaker promised they would do better.
FAA's approach was too hands-off, too focused on paperwork audits, and not focused enough on inspections. We have changed that approach over the last several months, and those changes are permanent.
Finally, in golf, Rory McIlroy and Patrick Cantlay are tied for the lead at 5 under after round 1 of the U.S. Open at Pinehurst. McIlroy just teed off to start round 2 while Cantlay goes off this afternoon. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. David, here's the ignorant question of the day. Is there a difference between a violin and a fiddle?
You know, I was told at a young age a fiddle is something you could spill beer on and still plays. The instrument is fundamentally the same, but that's how I always heard. You're not going to Pinehurst, are you? You've made your Duke reference
no,
in the
I've
morning.
been to Pinehurst several times. Wonderful place. Brutally hard golf course.
Yes.
I putted off those greens multiple times. Put the ball in your pocket, open the next beer, and go to the next
You'll
hole.
be watching this with experience, knowing how tough it is.
Exactly right down there in North Carolina, the Pines of North Carolina. Good stuff there. We have futures off a little bit here, off about 0.5% for the S&P. We'll have more coming up. This is Bloomberg.
Thank you.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The S&P 500 and NASDAQ 100 set to open lower to end off the week after notching up record highs every day this week. We have S&P futures down 0.4%, Dow futures down 0.6%, NASDAQ futures down 0.2%. The yield on the 2-year 4.67%, down 2 basis points. The 10-year yield 4.19%, that's down 5 basis points. Checking with commodities, we have spot gold higher at $2,335 an ounce. Brent crude $83 a barrel. WTI crude $79 a barrel. Companies in space travel, well, they're making news with the Pentagon. The Department of Defense had selected SpaceX, Blue Origin, and the United Launch Alliance to all compete for as much as $5.6 billion in contracts for defense launches. And value meals, we're seeing a resurgence in the fast food space. We've seen it with McDonald's and Burger King. Now, Starbucks getting in on the action. You can get a deal. It's introducing pairings menu, bundles from $5 to $7. I guess that's a deal? I don't know.
I don't know.
$7 per minute? Okay, that is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in a Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. All right, let's get right to our next. I think I'm going to have a problem with this next guest here. Eric Lynch, Managing Director, Scharf Investments. He's been around the block once or twice. He knows what he's talking about. But, David, maybe you can help me out here. He got his MBA from the University of North Carolina.
Oh,
I mean, what do we do there?
Dear to my heart, not to yours. The Fuqua.
He got lost going to Durham, found himself in Chapel Hill.
Oh, yeah, I'm sure,
but here he is.
Agree with that.
David, thanks so much for joining us here. Really appreciate it. I guess we're all happy with this market here. I mean, boy, the market's up 12, 13% here in terms of the S&P 500, but it feels like not everybody's participating here. It feels like, boy, if I'm not in those big tech names, what do I do? How do you guys think about this market here?
Yeah, it definitely, there's this disconnect, Paul, between the kind of aggregate market looking pretty safe and steady, just a slow upward grind, VIX at kind of post-pandemic lows. But, our opinion is if you look under the surface, the fact that the markets, I call it the Olympic heavy, weightlifter kind of holding up the market with kind of two sides. One side is AI leading the market. The other side is cyclicals and this reflation narrative. Both of them don't have a tremendous amount of supportive data, at least yet. So that makes it kind of risky in our minds, both in terms of on the tech side, multiples having expanded from 20 times at the end of 22 to 33 today. And then on the cyclical side, again, earnings estimates actually coming down for the cyclicals, even though those sectors have been and industries have been some of the best performers year to date.
We were talking about the need for this market to broaden out, and I recall you talking about the boring 473, the 493 before. So the Magnificent Seven, and then you've got all the rest. Are you seeing signs of that happening? Again, we have those 7 stocks. I guess that's diminished in recent weeks, recent months as well. But what's it going to take, do you think, for this to broaden out further?
Yeah, it's a great question. I think we had a little head fake. There was several weeks where the equal weighted index for the S&P started outperforming the market cap weighted index. But then the last several weeks, you've had kind of this resurrection of the Mag 4 led by NVIDIA. And so, so far, you're really still not seeing that massive broad-based rally. It's hard to say that's going to take, to be honest. The earnings are really probably the only way out. Q1 earnings were good. They were certainly better than they've been in the last 6 quarters. You had a 5.9% year-over-year growth. Half of that was NVIDIA. But if you look at the median growth of the S&P 500, it was okay. It was kind of mid-single digits, which that sure is better than 0, which is where we were for several quarters.
What stood out to you from that Adobe earnings call yesterday? Lisa Mateo telling us what's up 14% here in the pre-market. This isn't a company that we often talk about when we're talking about AI. I know that there has been some fear, can the company keep up with all the advances that we're seeing, particularly with kind of the visual AI that we've seen pioneered? What stood out to you, and sort of how do you see Adobe fitting into this broader AI picture?
Yeah, the AI from Adobe is pretty important. Here's why. Today, AI has really been a hardware story, right? It's been NVIDIA, it's been others kind of memory chip makers, it's been the leasers of NVIDIA, or the buyers of NVIDIA chips leasing it, the cloud hyperscalers. And so everybody else is kind of, trying to get us excited, but have little to show for it yet. And so Adobe was a decent print in the sense that, they guided a little higher. I think it does actually smack of some desperation from investors because, to put it in perspective, revenue grew 10% year over year. Adjusted profits, EPS grew 15. That's actually a pretty significant deceleration from what Adobe had been doing the prior 3 or 4 years. So it's in one case, it's good. It was a relief rally because the Adobe did a little bit worse than the last quarter. But to put in perspective why I think it was kind of a relief rally, the guide upwards was only 1.5% on the midpoint of the next quarter, and the stock kind of went crazy. So I think this is a really important point because the street is desperate for AI profitability to transfer from the first derivative hardware to the second derivative software players. You saw it with Oracle. Oracle also had a really good print this week. So there are some winners. I think Adobe probably will end up incorporating and getting some incremental revs.
Hey, Eric, one of the things that surprised me this year with the strong performance of the equity markets is it's happened with a backdrop of where expectations for interest rate cuts have really turned negative throughout the period. So we started the year with the market discounting 6 rate cuts. We're sitting today with maybe 1 or 2. Despite that change in interest rate outlook, stocks have outperformed. Tech stocks have outperformed. Does that surprise you?
Yeah, if you would have asked me and probably most investors, we would have, obviously kind of not believed that the S&P would have ground up the way it has. Clearly you've kind of substituted what was a bet on 6, 7 interest rate reductions at the start of the year, and that kind of lifting the boring 493 and the economy in general, to okay, well actually the economy is stronger than we thought, and oh wow, we're really still very excited about AI. So I think that in some respects it's even more concerning market because it's even more concentrated in this AI kind of tech story. Like I said, what gives us pause about the story, we have the probably misfortune of being a value-oriented money manager based in Silicon Valley. I guess we're masochists, but we are definitely, we've seen this movie before, and our feeling is that AI is really important. It's exciting, but at the end of the day, there's been a lot of multiple expansion. Like I said earlier, not a lot of profitability. One of the things that's interesting, guys, is that if you think about the accounting of all this growth capex from AI investments, think about NVIDIA, half the profit growth in the S&P this quarter.
Yep.
Basically recognizing revenue, growing over 260% year over year, whereas all the buyers of the chips, they're amortizing over 5, 6, 7 years. So you've got kind of this boom revenue kind of juice, and then you've got this slow expense record. So the concern is that, wow, all this growth capex better start delivering returns, or profits are oversized.
All right, Eric, thanks so much for joining us. Really appreciate it. Eric Lynch, he's the managing director at Scharf in Investments. Guess what, David? Bloomberg Surveillance is brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low, transparent commissions. Learn more at ibkr.com/bonds. Really smart note out from Torsten Slok, chief economist over at Apollo this morning. Before the pandemic, the share of outstanding mortgages with interest rates below 4% was 38%. Today, it's 63%. In other words, housing is adjusting very slowly to Fed hikes. Millions of households still benefit from having locked in low mortgage rates during the pandemic. I'm not one of them. Put differently, the transmission mechanism of monetary policy is much slower than normal, and the Fed will need to keep interest rates higher for longer to get inflation under control. His notes, they're just so
always
clear,
good, every
so
day,
concise,
beautifully illustrated.
I quote them all the time because I actually understand them. How about our good friends from Sayreville, New Jersey, John Bon Jovi?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, David Gura sitting in for Tom Keene. I'm Paul Sweeney. This is Bloomberg Surveillance for a Friday morning. Coming up this morning, we're going to check in with Selma Hepp this hour, chief economist at CoreLogic. Talk about the residential real estate market. I've locked in my 6% mortgage. I'm feeling pretty good about it.
Paul.
8:15, Brooke May, managing director at Evans May, will talk about kind of what we're doing with this market here. Can I just buy a 2-year treasury and sit on the sidelines? I think that feels pretty good. You want perspective on the market? You want to check in with Quincy Crosby, Chief Global Strategist at LPL Financial. So we got a lot coming up this hour. Bloomberg Surveillance is brought to you by Cohn-Resnick Advisory, Assurance, Tax. See how business strategies from the world of golf can help your company build competitive advantage. Watch the Business of Golf series at cohnresnick.com/golf with our Bloomberg Business Flash and everything that's happening in the world with Lisa Mateo.
You got it. Futures, they are falling after a fresh all-time highs on Wall Street for the fourth time this week for the S&P 500. Right now, the S&P 500 down 0.5%. Dow futures down 0.7%. NASDAQ futures down 0.3%. The 2-year yield, 4.67%. That's down 1 basis point. The yield on the 10-year, 4.19%. And that's down 4 basis points. To currencies, the yen weakened past the 158 per dollar mark. The Bank of Japan kind of delayed a decision on its bond buying plan. So right now we have that at 157.09 against the dollar. To earnings we go. We have shares of Adobe. They're higher, up 13%. It raised its annual profit outlook and projected strong future sales for its creative projects. And then we're sticking with tech. We'll go to Microsoft. Shares down about 1%. It pulled a new AI feature from its Windows software for new PCs from wide release, and instead, it's going to test it with a smaller group. Meanwhile, Apple, it's now overtaken Microsoft as the world's most valuable company. Shares down about 0.5%. That is your Bloomberg Business Flash. Paul and David. Oh, by the way, the live chat going.
Yeah.
And they talk about the violin and the fiddle, okay?
Okay.
And they say the difference between the violin and the fiddle is the violin has strings and the fiddle has strangs.
Wow.
Is that good?
Different vowel. I love that. I love that. I'm going to steal that.
You play the fiddle, right, David?
Yes.
He plays the fiddle.
Yeah.
Okay, very
With
good.
strangs.
Strangs.
Now I know.
Now you know.
I will steal that.
Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. So last year I bought this sprawling estate down on the Jersey Shore. My mortgage came in at 6%.
Wow.
I felt like the biggest chump because even knuckleheads like Matt Miller, that financial guru, he's got a mortgage of like 3%. Alex Steele, I think, is sub 3%.
Wow.
So, I'm sitting there at 6%. But then mortgage rates, there's
lower
over
than
7.
it is now.
They're
we're
over
6.95, I
don't
think
know
is the
what
average.
you do here in the market. So it's interesting. So we'll have to see. I'm going to blame Michael McKee for this because he's actually down there with the Federal Reserve Chairman all the time. He takes the shuttle down to D.C. and talks to the Fed chairman.
Surveillance Gulfstream is no more.
No,
Sorry.
Tom's got the dibs on that. So Michael McKee joins us here, our head of all that economic stuff at Bloomberg Television. What did you see, or what did you hear, what did you sense down there in Washington this week with the Federal Reserve, Michael?
Great uncertainty.
Okay.
They don't know what they're going to do because they're going to watch the data there. They believe that inflation will keep going down, and they believe they'll be able to cut rates this year, but how many times and when is an open question. And for them, it's a question that doesn't have to be answered now. It's the people on Wall Street who want to know on a day-to-day basis exactly what the Fed's going to do, what time of day they're going to move rates, et cetera. So there's going to be this tension for the next couple of months. I think the only good thing is if everybody on Wall Street's going to go out to the Hamptons or on vacation and Jersey
US
Shore.
Open
and all those guys who don't have mortgages.
Right.
So they're not worried about the rate. And so maybe the summertime will be a little quieter, but that's the concern is, when can we do something?
Let me stick with housing, and you pour over the inflation data. Housing, rent, still so sticky relative to everything else. Are you seeing signs of that easing? What's your sense of the timetable by which that is going to start to come down relative to the rest of that giant basket?
Well, the timing is hard to call because it hasn't happened as people thought. But the rent components, the shelter components of the CPI and PPI and PCE have all sort of stabilized. Now, some of the experts like Omer Sharif of Inflation Insights are saying that when you look at the seasonal adjustment factors that will come into play over the next few months, we should start to see an additional downward move in these indexes. They've been running about 0.4 a month, and if that goes down into the 3s because of the weight housing has, that'll make a big difference in the overall inflation rates.
How about the consumer? We're going to get some retail sales numbers next week, Michael. I mean, I guess still looking for some growth here in retail sales. I guess, ex auto and gas kind of looking to be up maybe 0.3%. I mean, so still some positive retail sales. It looks like the consumer, by and large, is still hanging in there. Is that kind of what you see?
That seems to be the case. We generally get increases over a period of time because the economy grows and more people out there spending more money. But the rate of increase has been the question, and it was very high during the pandemic, obviously, because the government was handing out money and people didn't have anything else to do, so they went and bought stuff. Now the question is, are they still buying stuff? And we saw yesterday and Wednesday that most of the change in the price indexes came in goods. So if goods prices are falling, that might lead people to buy more stuff, except that retail sales are measured in dollars. So it may be sort of a wash. And gasoline has fallen a lot over the last couple of weeks. So that could bring down the overall number. But we'll look at what they call the retail core and see how people are doing. It doesn't seem that they want to pull back yet.
Yeah, you mentioned gasoline, so that's my
good news for you,
Paul Sweeney.
Yes,
personal inflation index. It's just the daily national average gasoline price, regular unleaded, which Matt Miller scolds me for that I should not get regular unleaded.
Get super.
I should get super for the Beamer. Yeah, I mean we come down from 368, we're down to 346.
There you go.
A gallon.
Ex-California, probably even lower.
Oh my goodness.
That helps. And also, you two guys aren't wearing ties, so obviously
feel free to take yours off.
Yes.
I don't know if you saw Anna Wong, who's our chief U.S. economist at Bloomberg Economics, did a note the other day that noted that men's underwear sales have fallen off a lot.
Really?
And she wondered what's wrong with us. So like, well,
Well,
don't we need underwear?
Okay, here's something I want to see the reporting on, or the academic study is the what are the GP1 drugs? What are the
the Ozempic.
The Ozempics and
weight loss,
Wegovy's. I have personal experience here. My going out to dinner bills with my girlfriend, they're down by a third.
Wow.
Doesn't eat, maybe has a drink, versus she's a cheap date. I mean, and I wonder how that's impacting retail sales.
I want to go to the doctor and get a prescription for that for my wallet.
Yes, exactly. I mean, it's having an impact.
We could all lose weight, but we could all save money. It's funny. There are the beginnings of studies on what impact this may have on consumer spending, and food processing companies have already started looking into how can we find ways to get you to buy fattening stuff that doesn't fatten you anymore. And so this is something that's going to play out over the next couple of years, but it's going to be fascinating because they keep finding other things that these GLP-1 drugs cure. So there's going to be a lot of different areas in which there's room for research.
And Tracy Alloway and Joe Weisenthal and Odd Lots getting into a little bit of those economic knock-on effects. Mike, I wanted to ask you about this last meeting, returning to the Fed meeting. It was one in which there was a statement and a lot of other materials, and so you had the dot plot and the summary of economic projections. I heard a lot on the heels of that about the way in which Fed Chair Jay Powell looks at that or regards that information. And I wonder if you could help me and us understand that, sort of how his sense of that information or what that can project or convey to the public is different from past Fed chairs.
Well, he's much more plain spoken than past Fed chairs. He's not an economist by training. He's a lawyer by training, but he doesn't even sound like a lawyer. He doesn't use Latin in his press conferences. But I think the point that they try to make, but not too hard, is that these are not a Fed forecast. These are 19 different forecasts, and they work backwards to the dots because first they decide what each individual decides what he thinks GDP is going to be, unemployment is going to be, and inflation is going to be. And if that's the case, what would the Fed funds rate be at that point? And so that's what they come up with. Unfortunately, over the years, this has become, the Fed says it's going to cut one time. And you look at the last dot plot, there were 8 people who said that they were, out of the 19, who said they were going to cut twice. Only 7 said they were going to cut once, but 4 people said they weren't going to cut at all. So that pushed the median to 1. But it wouldn't take much to get 2. And there are a lot of people on Wall Street who now think the Fed could start in September setting up 2.
Yep. All right. Michael McKee, thank you so much for
it's
joining
like
us.
old home week.
Yes, exactly.
Yes.
Exactly. Michael McKee.
And I would tell you, if you want to ask Alex Steele about her mortgage rate, she's more than happy to tell you.
I know. You know, she and Matt Miller.
Has a bumper sticker on the car.
Exactly.
I think, yeah.
They think they're like financial, gurus there. So it's good stuff. I'm sitting here at 6%, but not so bad. Michael McKee, International Economics and Policy.
You'll
with our
refinance
news.
Eventually.
What's
right?
that?
You'll refinance.
I'll refinance it. I thought it would be refinancing
sure.
by now, but I haven't done it. Michael Barr with our news.
Thank you very much, Paul, David, and Lisa. It's day 2 at the G7 World Leaders Summit for President Biden. The president sits down today on the sidelines with Pope Francis. At the top of their agenda, the wars in Ukraine and Gaza. They'll also discuss artificial intelligence and climate change. Yesterday, Biden and Ukrainian President Volodymyr Zelensky signed a bilateral security agreement between the U.S. and Ukraine. Zelensky after the signing.
This is an agreement on cooperation and thus on how our nations will become stronger. This is an agreement on steps to guarantee sustainable peace, and therefore it benefits everyone in the world.
Donald Trump met with congressional Republicans near Capitol Hill for the first time since his supporters stormed the Capitol on January 6, 2021. The presumptive Republican presidential nominee appeared with a large group of GOP lawmakers after the meeting, saying it went well and criticizing the Biden administration.
We don't have success right now. We have inflation that's killing everybody. We have levels of inflation that nobody's seen for, they say 42 years, they say 53 years, and they say 75 years. I would say probably all of them are wrong. Probably we've never seen levels like this before.
Republican former Governor Larry Hogan, who has been one of Donald Trump's fiercest critics in the GOP, received Trump's endorsement in his Maryland Senate bid yesterday. Late last month, Hogan angered Trump's campaign when he said that the public should respect the verdict and the legal process prior to Trump's conviction by a Manhattan jury on 34 felony counts related to hush money payments. In golf, round 2 of the U.S. Open at Pinehurst is underway. Rory McIlroy and Patrick Cantlay are tied for the lead at 5 under. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Michael Barr, thank you so much. We appreciate it. I'm very happy the Leprechaun, my guy, Rory McIlroy, top of the leaderboard. Good Irishman.
Yes. You'll be watching this weekend, I imagine.
I will be.
Hunkering down.
I will be. Although, I was watching it yesterday on the USA Network, and then they switched over to Peacock.
Aha.
I don't have Peacock.
It's the story of streaming.
It's just
from one to the other.
Exactly. I mean, it's
$50 later.
So I go over to Peacock, and then I got to see. I got to subscribe. I'm not subscribing. And just for spite, I went out and I canceled one of the other apps I've got on my phone just to
probably give you a deal to come back. That's how it kind of works.
Yeah, that's the new world we're in. The paying this big cable bundle that used to be the way to go, but not anymore. So we'll keep an eye on that. But that'll be on some regular networks this weekend. S&P off 0.5% here in the futures market. We'll have more coming up. This is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still falling after more records for the S&P 500 yesterday. Right now, S&P 500 down 0.5%. At Dow Futures down 0.7%. And we have NASDAQ Futures down 0.3%. We'll take you over to the bond market. We have the 2-year yield at 4.66%, down 3 basis points. The 10-year yield at 4.19%, down 5 basis points. Over to commodities, we have spot gold higher, $2,331 an ounce. We have Brent crude, $83 a barrel. WTI crude, $78 a barrel. On the economic calendar for today, we get a report on import prices. That comes out in about 15 minutes from now. That'll be followed by a read on sentiment at 10 a.m. Wall Street time. We'll also hear from Chicago Fed President Austin Goolsbee today. And Tesla shares up another 1%. This is after shareholders backed Elon Musk's compensation package and for moving the company's state of incorporation to Texas. And some news surrounding Visa and MasterCard, a $30 billion swipe fee settlement deal between those two companies and retailers. Well, it could be rejected by a federal judge. Visa down nearly 1%, MasterCard up about 0.5%. And shares of GameStop, they were lower. Well, now they're up about 2%. It's been fluctuating after this post from Roaring Kitty that looks like he exited his options position in the company. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. As always, David Gura sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming that video thing live on YouTube. So head over to youtube.com and search Bloomberg Podcasts. One of life's great mysteries is, what is a Hoosier? No idea.
I actually couldn't tell you.
Couldn't tell you, and people that went to Indiana University can't tell you. It's just one of, again, life's mysteries that we're just going to have to deal with. Brooke May joins us. She's a managing partner at Evans May Wealth. Brooke, I'm still waiting. I had my financial advisor call me yesterday while I was on the train, pitching me something which I bought, which I usually do because I was, too busy to really think about it. But in reality, why shouldn't I just be sitting in a 2-year treasury at 4.6 or 4.7%? That doesn't seem like a bad deal. How are you thinking about it when you talk to your clients these days?
It's not a bad deal. However, that 4.6% won't be there next year. Mm-hmm. We are expecting rates to come down, and we're telling clients right now, when it comes to fixed income, let's go ahead and lock in for the next 5 to 10 years, or shift some of our allocation that we've been sitting in money markets or short-term treasuries back into equities. We've seen that the equity markets rallied, and we think that that's going to continue going into year end.
Lisa Mateo mentioning a moment ago, we're getting this sentiment read a little later this morning. I'm curious, Brooke, sort of what the sentiment is among your clients. How are they feeling right now as we see the Fed put off cuts here perhaps till the end of the year, maybe next year? What's the sense that you're getting about their appetite for investment right now?
It's really an interesting time. When you ask individuals, middle income and high income individuals, how they feel about their personal situation, they're very positive. We're seeing household net worth at an all-time high, I think 172 trillion.
Wow.
But when you ask those individuals about the economy, they don't feel good about the economy. And there's a wider disparity there between their personal situation and how they feel about the overall economy, more so than there's been for a very long time. So, those that are holding equities are pleased. If they've got retirement accounts, they're likely hitting all-time highs, but not necessarily the sentiment that we would love to see across the board.
So, Brooke, for your outlook, your equity outlook, how much of that is dependent upon rates actually coming down versus earnings? How do you think about that in terms of performance?
Good question.
Well, the two are related. We've seen corporate management has been able to navigate this higher interest rate environment, but higher interest rates have been a headwind for earnings. And so as we see rates come down, there are certain pockets of the market that are much more sensitive to interest rates than others. Small cap, for example. Small cap, when you look at the Russell 2000 as a whole, only about 30% of the companies are about 70% of the companies are profitable, which means 30% are not. And when you look at the debt within small cap companies, about 44% of that debt is floating rate, whereas only 10% of the S&P 500 debt is floating rate. So that is clearly cut into earnings. So as we see rates come down, we don't expect it to bleed through in the third or fourth quarter, But in 2025, that should be a tailwind for earnings and therefore another catalyst up in the market.
I keep hammering on this, but you had the Magnificent Seven. I guess you've got the Mega Five, that number winnowing, but we see such strong results there. I guess not as strong as they were last year. But I wonder sort of what you're looking at beyond that. There's kind of the flashiness or the attraction to those stocks that continue to go up. Where are you seeing opportunity beyond that? You mentioned small caps a moment ago.
Yeah, we do. We continue to allocate to the Mega Five, and we think that's where we're going to find leadership in the market going forward. Just because they have led doesn't mean necessarily we need to see a change there. However, industrials look good and energy is relatively cheap. So those are other areas of the market that we've allocated funds. We also like some of the weight loss drug companies and small caps, as you alluded to.
We were talking about that.
Yeah.
It's big.
It's it's funny when the packaged goods companies started talking a year or so ago about the potential impact on their business. Come
Rolled
on,
your eyes.
I rolled my eyes. But I'm seeing it firsthand. It is real. I don't know. So I don't know how you adjust for that. So, Brooke, a lot of times I really want to take a look at small caps. I want to push some money to small caps, but I feel like I just get burned every time. What do you need to see to have small caps perform?
For companies that have strong free cash flow and less leverage than some of their peers. But, when we haven't, small cap is not near a bottom, it has rallied, but year to date, it's basically flat. And so we don't necessarily expect a surge to be imminent in the days or weeks to come. But there's a wider disparity right now between large cap valuations and small cap valuations than we've seen in a very long time. And there's eventually going to be a catch up if you believe in reversion to the mean. And so we're allocating now before we see a rally. And we think that if we're patient, we're going to have exceptional returns going into next year.
I admire you not answering Paul's question about what a Hoosier is, but I'll ask an Indiana specific question, which is, we hear from the Fed chair that he and his colleagues are looking at the totality of the data, his favorite phrase. What are you looking at when you look at kind of the broad array, that panoply of economic data? What's most important to you as you think about what's likely to happen with the Fed and with rates here in the months to come?
They are. I think Powell used that phrase, the totality of the data. And so we think that there's a clear trend in the economy softening. We get mixed data all the time, but if you pull back and you look at over the last 12 months, GDP has gone from 4.9% to 3.4% and now 1.3%. Unemployment, it was in a trading range, or it was in a range of 3.7 to 3.9% for a prolonged period. Now we've seen it tick up to 4%. And if unemployment ticks significantly above 4%, the Fed's got an issue because the economy can turn very quickly. So we think that we really need a rate cut in September. And right now, the Fed has the ability to look at Canada and Europe. They recently had rate cuts and see what transpires in their economy over the next few months. It will take a little bit of time for those rate cuts to bleed through to economic activity and potentially higher inflation. But they at least have an answer key to the inflation test.
All right, Brooke, thank you so much for joining us. Always appreciate getting a few minutes of your time. Brooke May, she's a managing partner at Evans May Wealth Management and a proud graduate of the Indiana University. It's interesting to see some of the European central banks cutting rates, Bank of Canada, the Fed not leading. I don't know if that means anything.
No, but such an interesting point that Brooke made, that you have that, she called it an answer key, just some guidance that they'll be able to get from how that plays out. I mean, the great fear, of course, on the Fed's part is that they might go early. We could see inflation spike once again. So it does give them like a nice test case, obviously with a lot of risk baked into that. But I'm interested in that observation that they're going to be watching and just waiting to see what happens with those other banks.
And despite, again, not cutting rates, stock markets have performed very well this year. I guess it's just, it's almost like the anticipation of a rate cut is all investors kind of need to feel like, all right, I can still be risk taking.
All baked in, it seems like. And so we sort of saw that in a micro way on that Fed day with that CPI number coming out, markets reacting really strongly, and then people took a breath.
S&P 500 futures here off about 0.4%. The Dow's off about 250 points. That's 0.6%. The Nasdaq doing a little bit better here, off about 0.2%. Yields coming in. The 10-year Treasury, 4.19%. Let's get those mortgage rates down a little bit. How about that? Who's in charge of that? We'll have more coming up. This is
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling. Dow futures leading the losses, down 0.6%. S&P futures down 0.4%. We have NASDAQ futures down 0.2%. The 2-year yield 4.67%. That's down 2 basis points. The yield on the 10-year 4.21%. That's down 3 basis points. European stocks headed for their worst week since October. Growing concerns over politics in France. You have the CAC in Paris down more than 2%. The euro fell to its lowest against the dollar since April. The euro now at 106.88 against the dollar. We have the bond. We did the bond market. We'll head over to the markets right now. And moving those markets, that would be Adobe, up 15%. Its results signaled it's part of that AI boom. Online fashion retailer Shopify up 1%. This is after Evercore raised the company to outperform from inline. And good news for snack lovers. Mondelez says it plans to keep offering Oreos, its other chocolate treats at affordable prices, even as those cocoa prices remain sky high. That is your Bloomberg Business Flash. Paul and David.
All right, very good. Lisa Mateo, thank you so much. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Economic indicators. They are brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn more. Let's go right to our next guest. Let's get right into it. Quincy Crosby, Chief Global Strategist at LPL Financial. That's a publicly traded company. You can go type in LPLA into your Bloomberg terminal and get everything you need to know about that company. Quincy, we've had a pretty darn good start to the year in terms of the equity markets. I mean, we're not really breaking any sweat here. We're up 12% or so on the SPX here. What does this market need to continue this move higher? Does it need lower rates? Does it need higher profits? What are really the catalysts that you need to see for this market?
Well, the market, as you know, has been pretty in a tight band. The only thing that we've started to see with the megatech is that the companies that are underneath that megatech, the broadening out has happened there. So you got Broadcom, you had Oracle, Adobe had good numbers. But the fact is we haven't seen it spread out recently, to the banks, to industrials, even, stock specific in healthcare. The market, if we don't get the interest rate cuts, you're going to stick with the big tech because they don't need those cuts. They've got strong balance sheets, management. AI is still an important theme, but with the market at these valuations, this is the issue. At some point, something always gives, and we expect to see some volatility going into the depth of the summer. But we do expect to see the market, according to historical patterns, end the year still in the green. But the question really is, with these yields coming down, and this is where the market gets really discerning. It's, well, okay, we want the yields to come down. We don't want them to collapse, because what that suggests is that the economy is slowing and slowing more markedly. Next week is really important for this market. We say that every week, that the data, are very important for the market. But next week, we get the retail sales. And that's key. We all know the reason why, because we, the consumer, represent about 70% of GDP. We'll see how we are spending. And then we'll be able to see whether or not this consumer discretionary move, which has actually moved higher, is based solely on Tesla, based solely on Amazon. And remember, with Amazon, it is actually about cloud within Amazon. So since we're so important to GDP, next week is important. And whether or not these prices are coming down, we'll also get another picture, another snap, because we'll get the Philadelphia Fed survey, which has a very positive correlation with the rest of the because the reason I mentioned this, we'll see if prices paid comes down in that survey as well. And then we'll get a picture of whether or not the Fed sees this as a trend, or do they see the CPI with the decimal point move higher, lower rather, whether or not that was a one-off. So the market has looking at every piece of data through the lens of the Federal Reserve, and how do they see it?
It's right where I want to go. As we look ahead, I'd love to look back a little bit as well and just get your sense of what happened on Wednesday. You had the Fed chair, Jay Powell, seemingly disinterested in extrapolating any kind of trend from what we saw from that data on Wednesday. But how do you see that CPI print, and what do you make of the market reaction that we had to it? Obviously, a lot more optimism on the market's part than we saw from the Fed, more muted optimism from Jay Powell and his colleagues.
Well, exactly. A number of us were paying very close attention to how he answered the questions. He answered the questions almost the same way, regardless of what the question was. It was as though he had, been in the witness stand and been told by the lawyers, this is what you're going to say. Well, very well coached. And the dot plot, didn't give us any suggestion of what they're thinking. They don't want to be caught if this is, in fact, a one-off. They must have had some solace when the producer price index came in and showed that prices are coming down. They need to make sure it's a trend. Remember, when the market was demanding a reaction from the Fed, are you not going to cut rates? The market had expected 6 rate cuts, but it was the dot plot that actually sent the market higher when we saw those FOMC members saying, yeah, we do. We see rates coming down. The Fed doesn't want to be wrong. I mean, they don't keep mentioning stagflation. They don't keep talking about it, but we know that that's on their minds. They don't want to be wrong on this. Also, I want to point this out. We are all paying attention to the labor market, because if that 4% hike is a harbinger of more unemployment, Chairman Powell made it real clear, and he has been, for a number of speeches, we're going to cut rates. We're not going to let the labor market deteriorate and fall apart. But I do want to add here, the Fed, especially Powell, is very concerned about that lower wage earner. They don't want them suffering. And this goes before, COVID, where they were very keen on making sure that the lower wage earner had jobs, even to the point that they sort of sidestep the idea that maybe inflation would move higher if the Fed didn't start tightening. So we're paying very close attention to that. The retail sales numbers next week, that may give us maybe for this period, the final case on the consumer.
And those come out on Tuesday of next week. Quincy, I read your notes and listen to you speak, and you've talked often about how you want to see the economy cooling but not cold. What's the temperature now, as you see it, when you look at the economy and that temperature?
Well, I do see it cooling. There's no doubt about it. You wouldn't see all of these retailers cutting and cutting and cutting prices if a consumer was going in there and accepting the higher prices. It's as if the consumer is saying, hey, I'm not going to get the brand. I'm going off brand. We're seeing that as well. More and more, we're hearing this from companies telling us, well, the consumer is going off brand. It was interesting that Costco made the point. Now, why would they make this point? They made the point because it hasn't been the norm for a number of months. They said, we saw them coming in, they're buying what they have to buy, but we're seeing more discretionary spending. They're going and looking and buying, picking up. Little by little, they're looking at that. At Walmart, the same thing. They've got people going in there. We know from the credit card information with $100,000 of income, they say, well, they're coming in to buy food, but maybe they're buying a little bit more discretionary. That's not enough to tell us that the consumer is in good shape. When the consumer is worried about the labor market, they pull back. We will have more indications about whether this is cooling or is it really cold. The market wants it to be cooling, not a pullback so dramatic. We'll be with the retail numbers, but something else is going to start already, and that is back to school sales.
Hey, Quincy, I like themes, and I think one of the themes out there is my government's spending money hand over fist. I got Inflation Reduction Act, whatever that is, CHIPS Act, all that kind of stuff. Can I play that in the marketplace?
Well, yeah, I mean, we're already seeing it, actually. I mean, the fact of the matter is, the AI boom is going to need something else. And we see it in infrastructure. We see it in infrastructure, by the way, within AI, right? We see it with Broadcom. We saw it with Oracle, with Adobe. I'm going to help with that infrastructure. But there's the other infrastructure, and that is that you're going to have money spent on building of these data centers. It's a long way off, but you're already seeing institutional money managers creating portfolios for their clients to go into that, even though it is going to be a very long process. But you're seeing that. You're also seeing, for example, the grid, the concerns over the grid. Utilities have gotten a bid, not just because utilities typically see the top of the yields, by the way, historically they do, but also because they are going to be crucial in this. But what are we going to see with this deficit? This is the big dilemma with this deficit. And I want to point out the auctions become even more important, because if those auctions don't go well and those yields rise, you're going to see this market turn on a dime. And maybe the banks are the beneficiary, by the way, because what do we hear this week from Huntington Bank? All of a sudden, net interest margin is a concern as these yields go down. Well, if the auctions go bad, they'll be able to say, well, net interest margin is going to be okay.
Yep. All right, Quincy, thank you so much for joining us. As always, appreciate getting your thoughts, your perspective. Quincy Crosby, she's a chief global strategist at LPL Financial, based up there in Boston. Just looking at the futures here, just kind of sitting a little bit lower here. The S&P's off about 0.4%. The Nasdaq's off about 0.2%. Yields holding pretty steady here, off a little bit here. The 10-year Treasury, we're at 4.23% here, so we'll keep an eye on that. WTI crude oil up slightly, just under $79 a barrel. With our news in New York, here's Michael Barr.
Thank you very much, Paul, David, and Lisa. Later today, President Biden will meet with Pope Francis while attending the G7 summit in Italy. Yesterday, a major security agreement with Ukraine was signed. Biden and Ukraine's President Zelensky signed a security agreement to bolster Ukraine's defenses for 10 years. Biden says it brings Ukraine closer to NATO and sends a stark message to Vladimir Putin.
Our goal is to strengthen Ukraine's credible defense and deterrence capabilities for the long term. A lasting peace for Ukraine must be underwritten by Ukraine's own ability to defend itself now and to deter future aggression anytime in the future.
The U.S. and its G7 allies have also agreed to loan Ukraine $50 billion backed by profits from frozen Russian assets. Meanwhile, President Biden's competitor, former President Donald Trump, made his first visit to Capitol Hill since the January 6th riot. He met with lawmakers, including Senate Republican leader Mitch McConnell, who called the meeting entirely positive. The presumptive Republican presidential nominee is also making a big promise to the business community. Trump says he'll cut the corporate tax rate to 20%. Senate Democrats have uncovered additional private jet trips taken by Supreme Court Justice Clarence Thomas. Bloomberg's Nancy Lyons has the details.
In a newly released report by the Senate Judiciary Committee, lawmakers say between 2017 and 2021, Justice Thomas flew 3 more times than previously disclosed on the private jet of GOP megadonor Harlan Crow. The revelations come just a week after Thomas amended a 2019 financial disclosure to add a Crow-funded Indonesian cruise, as well as a stay at an exclusive California retreat for men. Thomas has previously said he did not discuss business with his friends and believed he did not have to disclose the trips. In Washington, Nancy Lyons, Bloomberg Radio.
At the start of round 2 at the U.S. Open, Patrick Cantlay is the sole leader at Pinehurst at 5 under. Rory McIlroy, who is through 2, was tied but fell back a shot to 4 under. Cantlay goes off early afternoon. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Michael Barr, thank you so much. We appreciate that. Tiger was 4 over yesterday. Phil, 9 over.
Yeah.
It's time for the new blood. Let's be honest here. But the course looks great. It looks like it's going to be, the cut's going to be +2. Tiger's at +4, so he's got to go a little bit under par here today to make the cut. So we'll keep an eye on that. I'll have that on the phone for my long train ride home to the Jersey Shore. I can see damn near a whole round with my train ride. S&P 500 off 0.4%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The S&P 500 and NASDAQ 100 set to open lower. This is after notching up record highs every day this week. We have S&P futures down nearly 0.5%, Dow futures up down 0.6%, NASDAQ futures down 0.1%. We have the 2-year yield 4.68%. That's down 1 basis point. The yield on the 10-year 4.22%, down 1 basis point. Over to commodities, we have spot gold higher, $2,329 an ounce. Brent crude $83 a barrel. WTI crude $78 a barrel. Some more economic data coming out this morning. May import prices, they were down 0.4% month to month. That was more than expected. This is after rising 0.9 the prior month. At 10 a.m. Wall Street time, we get a read on sentiment from the University of Michigan. To earnings we go. Shares of luxury furniture retailer RH, that's Restoration Hardware, really taking a hit, down 12%, reported a heavier than expected first quarter loss. And then we have companies in space travel making some news. The Department of Defense selected SpaceX, Blue Origin, and United Launch Alliance to compete for as much as $5.6 billion in contracts for defense launches. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene this morning, who's on vacation. We're here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well, so you can head over to youtube.com and search Bloomberg Podcast. I tell you, if you want to get solid credit analysis studies, go to a place like I did at the Chase Manhattan Bank, Start Your Career, or go to the Chemical Banking Corporation. That's where you get some serious training in credit research, and that's what our next guest, Joanne Bianco. She's the partner at Bond Blocks. Bond Blocks ETFs for fixed income. That's how I understand this company. So if you want to get exposure to fixed income and you want to do it through the ETFs, which is what the kids are doing today, Bond Blocks is the way to go. They've got everything over there. Joanne, thanks so much for joining us. We always appreciate getting a few minutes of your time. Where are you seeing the flows in your complex of ETFs these days? Where are investors putting their money?
Thank you, first of all, very much for having me on your program this morning. But in terms of flows, we're definitely seeing them kind of across some of our suites. So definitely interest in our high yield suites all the way down to our CCC index product. And we're also getting new flows into our more recently launched BBB funds. We have BBB corporate funds that are broken down by maturity bands, 1 to 5 year, 5 to 10 year, and 10 plus years. So investors can take advantage of the persistent performance advantage for BBBs over the U.S. corporate index, or also over the U.S. aggregate index, but with our products.
What's your sense of risk appetite? You mentioned those BBBs. When you look at high yield and investor appetite, how hungry are people for risk at this point in time?
You know, they seem like they're a little wary of risk, but that was not the right decision last year. Was risk outperformed. High yield was the best performing asset class in public fixed income. And this year, it's our top pick again. You know, we just think that the resilient fundamentals that you see are really helpful to high yield credit quality. I mean, obviously, you always have to pick your spots and figure out where you're most comfortable in the risk spectrum. But, you know, we have a product for that. We, break down industry sectors into the high yield into industry sectors. There's 7 different industry sectors. We have a sector rotation fund that actually picks the sectors for you. And then again, we have these credit rating category funds, BB, single B, and CCC.
So are you surprised, Joanne, that as you mentioned, high yield has been the best performer in public fixed income for a while now, and that's despite what everybody's telling us is a recession's right around the corner here. Are you surprised that high yield's been such a good performer?
We haven't been surprised by that because I've as you kind of alluded to, I have a very long history in credit and in high yield specifically. And to be honest, when I look at the fundamental starting point that we started last year at, we started this year at, it's not a necessarily, it's always hard to say, oh, this time is different, but it's different for now in that we do have, a higher credit quality index overall in high yield, and credit quality is holding up. I think a lot of companies did a lot to shore up their balance sheets, starting with the pandemic, and they continue to focus on refinancing. So those are also reasons why high yield corporate credit is so strong.
We had a week here with a Fed meeting. We heard from the Fed chair, and something that was talked about a lot is sort of the sense of what the neutral rate is. And I wonder sort of how his conversation surrounding that has made you think they're thinking about the neutral rate and about the kind of the restrictiveness of the policy that the Fed has in place and how that's affecting your world.
Well, I obviously since we haven't seen the economy in the U.S. go into recession or really even weakness that's that dramatic, it does seem like the policy rate hasn't possibly been as restrictive as they thought, and the neutral rate probably has shifted up. So it seems like the Fed is taking that into account in terms of, what they came out with in their Wednesday meeting.
So I guess one of the questions here is when people call in and say, hey, Joanne, I can just sit there in a 2-year treasury and get 4.7%. What do you say to them?
I mean, that's a strategy too. You could do, but there's a number of attractive strategies in fixed income. We say with part of your money, why not get that incremental income that you can get from high yield or triple Bs?
This is the clipping coupons question.
Yeah.
Yeah.
Why not?
I feel like I should ask that, filling in for Tom. I feel like if were he here,
he
would ask. He would ask about clipping coupons. Just, when you look at this environment and Paul mentioning your long history in this space, how novel is the moment that we're in? How unique do you see the landscape, the credit landscape right now? How does it seem to you?
It's just a better credit landscape than I've seen in the past prior to other down cycles. I definitely saw more excess build in terms of specific industries that could serve to reprice the entire market wider, like you saw with telecom, like you saw with energy. We just don't have that same kind of catalyst right now, which is really positive for corporate credit.
Right. Joanne, thanks so much for joining us. Joanne Bianco, partner at Bond Blocks. All right, let's go back to those dark days back in the pandemic, the lockdown, all that kind of stuff. There was this dude in Brooklyn would get up on his roof, Lisa, a beverage in his hand, always an adult beverage, and play the fiddle for us and put it out on social media. And I'll tell you, for those of us, you're just looking for stuff to kind of cheer you up back in those days, this was it. So those of you out there, go YouTube and look up David Gura and his silly fiddle stuff he did. And it was really,
I'm glad
really
you found that.
Good. It was great.
Yeah.
How often do you practice? How often do you play?
Well, I got young kids, so less than I'd like to. But growing up, I played a lot, and that was something that, during the pandemic that happened as a fluke. I mean, I had a little bit more time and was also going stir crazy, so I pulled the fiddle off the wall and went up to the roof. And I am again glad that you watched it, but was struck by how many people did.
Oh, yeah.
And I mean, we were all trying to find some connection in that strange time, but. It was great fun to pull out. I'm playing much less than I was then, but it's an instrument where, I mean, practice helps. But I've got this kind of repertoire of music from growing up, and I can.
What genre do you like to play?
Just old time, so it's the precursor to bluegrass. So the tunes that I play are all kind of folk songs in the public domain, and I grew up as we've talked about, in North Carolina. So a lot of the music that I play is from Round Peak, sort of Mount Airy, by Winston-Salem, Western North Carolina. Oh, I recognize
Is that you?
That's me.
And what are you playing here?
This is Soldier's Joy.
What?
I had to listen to a second of that.
Yeah. So, I mean, again, folks, go to YouTube, check out these videos. It's David on the roof in Brooklyn. Again, adult beverage in his hand, we can only imagine. And just kind of ripping these tunes off, and they're just great to watch. If you think back in those days, we're all just looking for something to cheer us up. David Gura on the fiddle in Brooklyn. Little Bruce Springsteen right here, going from David Gura to Bruce Springsteen. I think we can do that.
It's a good crossfade.
Has that ever happened in your career, going from David Gura to Bruce Springsteen?
It's the first time for everything.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up this hour, we're going to drive it forward here. We're going to talk to Margaret Brennan, get a sense of what's happening on Face the Nation. Coming up, we're also going to check in with Anna Rathbun. She's the CIO at CBIZ, Investment Advisory Services. We'll talk about where we're going to go with these markets. We have a Fed that looks like it wants to cut rates, but we'll see. Anjee Solanki, National Director of Retail at Colliers, to get a sense of how the consumer's doing. Retail sales coming up next week, so we'll get a good read there. So we got a lot coming up in this hour. Right now, let's go to Lisa Mateo and get a sense of what's happening in that market.
You got it. And we have futures. They are falling. This is after the tech rally rolled on for a fourth straight day. It took the S&P 500, the NASDAQ to new records. Right now, the S&P futures down 0.4%. Dow futures down 0.7%. And the NASDAQ futures, well, they're down 0.2%. We have the two-year yield at 4.67%, down 2 basis points. The yield on the 10-year, 4.21%, and that is down 3 basis points. To currencies we go. The yen weakened past the 158 per dollar mark. The Bank of Japan delayed that decision on its bond buying plan, and right now we have the Japanese yen 157.33 against the dollar. To earnings we go. Shares of Adobe set for their biggest gain in about 4 years. They're up about 13% after projecting strong future sales for its creative projects, and then we'll stick with tech. We'll go to Microsoft. Their shares, they're down about 0.5%. The company said it's pulling back that wide release of its new AI feature of its Windows software for PCs, and instead it's going to test it with a smaller group. Meanwhile, Apple has overtaken Microsoft as the world's most valuable company. We have those shares down 0.5%. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live in the Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. And that's where you'll find us. Right now, we're joined by Margaret Brennan, host of Face the Nation on the CBS television network. You can also listen to Face the Nation on Bloomberg Radio, 2 p.m. Every Sunday. Margaret, a million ways to go here. Like it seems like most weeks for you. Again, I don't envy you and your producers trying to figure out where to go here, but let's just start with the G7. It's kind of an odd G7 here. We had some leaders who probably have some more issues back home than they do on the international front, yet they got together in the beautiful seaside town of Puglia in Italy. What are your takeaways from the G7 and Mr. Biden?
Well, you're right. And this G7, as it continues right now, the leaders of the largest economies are going to start engaging with the rising powers who are also going to be paying a visit today to some of these sessions. And what do I make of it? Look, I mean, you're right. Many of these Western leaders don't have high approval ratings right now. We're not the only country dealing with the spillover of a migration crisis and its massive impact on our politics. Europe's been dealing with it since 2015. Yeah. And so this is a very real strain on the global system. And I don't know if people at home appreciate that it's not just about us, that it is a huge global strain right now.
Tom Keene yesterday pointing out the awkwardness of that family photo, which I think was more Diane Arbus than Annie Leibovitz in terms of how everybody looked when they were all gathered together. But Margaret, great to speak with you. And I want to ask you just about how large Ukraine looms at this meeting, as it has at past Group of Seven meetings recently. And we had this commitment that the U.S. signed with Ukraine, offering significant more support, this other deal brokered surrounding frozen Russian assets. Give us a sense of sort of the Ukraine story vis-a-vis this meeting. And look, you had President Biden saying we'll be with Ukraine until they prevail in this war. You, of course, so tuned into the conversation on Capitol Hill. How much of a guarantee, how ironclad is what President Biden said?
Well, it's a 10-year commitment. There's an out, of course, as any deal. It's short of what Ukraine wanted. As you know, they want to be a member of NATO, so that there's actually an attack on one is an attack on all, kind of guarantee that all the Western powers will have skin in the game and not be subject to the vagaries of who is in office, like a Republican nominee who has been very critical of Volodymyr Zelensky. I'm thinking of Donald Trump there, and also, very skeptical about engagement in that war, but now newly interested in the critical minerals that apparently are under the soil there. So this has got to be weighing on the shoulders of the Ukrainian president as he looks to the U.S. and to the West. And so that's why this is so interesting that they made this decision to use the interest from those Russian accounts as, a source for a loan. It's not seizing the Russian assets like Volodymyr Zelensky would love to see happen. It's inexplicable as to why Vladimir Putin left that part of him so exposed with money all over these European banks when he went ahead with that invasion. That remains hanging out there for the future, I suppose.
Margaret Brennan, CBS Television, Face the Nation this Sunday. What do you have for us?
We will bring you a conversation with Neil Kashkari, president of Federal Reserve Bank out in Minneapolis, to talk about the economy. Number one issue for voters right now. We will also have Mike Turner, Republican chair of the House Intelligence Committee. We want to hear about what happened in that meeting with Donald Trump yesterday when he went to Capitol Hill. Hugely significant as a Republican nominee who's under federal investigation and facing charges for his role in helping to have the Capitol attacked on January 6th. Went into meetings and was welcomed back as a sort of returning hero that might help the Republican Party win majorities. And I have Bill Gates to talk about nuclear power.
Interesting.
Can I ask you about Chairman Turner, so of course, helming that committee, and there's been a lot of criticism about two appointments that he made recently, Congressman Ronnie Jackson, one of them, Scott Perry, another. And I wonder if you could kind of put that move in context. Again, there's been uproar about those appointments, but maybe you can help us understand the history of this committee and how kind of fiercely, I won't say apolitical, but largely apolitical it's been. And I sort of wonder what you're interested in hearing from the chairman of the committee. Yes, why he made the decision, but what the ramifications of that might be for the committee going forward.
Well, as I see it, the most fundamental and basic responsibility for any American leader is the safety of the American people. Like, that's just assumed, right? And so when you're involved in intelligence and national security, that is the premise. And that's why these committees that deal with oversight of the intelligence community, I should say, have tried to be bipartisan and tried to be apolitical, or at least reduce the politics involved in key national security decisions and those that they provide oversight of. And Mike Turner of Ohio has really tried to bring that sensibility back to the committee. He and his Democratic ranking member, Jim Himes of Connecticut, will often do joint interviews together, raise issues saying, hey, we disagree on X, Y, and Z, but we both agree we've got to deal with China. We both agree we have to deal with this threat and that. And interestingly, you had been seeing that in the Senate as well. But when it comes to the House, we've seen tumult before, if you remember, during the Trump administration. And now Mike Johnson, the Speaker of the House, made this decision to name the two individuals that you referred to there, one of whom is under FBI investigation, Congressman Perry, for a role having to do with 2020 and a fake electors scheme. So the idea of appointing someone who's under investigation or recently under investigation to a committee that has oversight of the FBI and other intelligence agencies raises some eyebrows. And Ronnie Jackson, a close ally, former physician to multiple presidents, including Donald Trump, who came under scrutiny for prescriptions and for drinking and all these, there's all these allegations against two people who, if you were to go in with an application for security clearance as an everyday person, you might have a hard time.
Not a done deal.
You and I couldn't get that clearance, right?
That's true.
With those things.
Right. Margaret, thank you so much for joining us. Margaret Brennan, host of Face the Nation on the CBS television network this Sunday morning. You can hear Margaret Brennan this weekend on Bloomberg Radio. Listen to Face the Nation Sunday at 2 p.m. in New York, Washington, D.C., and Bloomberg 106.1 Boston, Newburyport. That's Face the Nation this Sunday at 2 on Bloomberg Radio. You think about these Sunday talk shows, and they're important for the networks. They're important for the folks within the Beltway. They're important for viewers who want to stay informed here. But but there's so many stories out there. I mean, I know you were involved with that in your days.
Helming a weekend
it.
show
Yes.
is difficult under normal circumstances, and these, of course, are not normal ones as we push ahead to the election. But yeah, you want to be dynamic and responsive to what's happening in the news, and it sounds like market has great guests lined up. But it is a challenge, and it truly means there's no rest on Saturday as you kind of push ahead to getting all that stuff ready for Sunday. But
yeah, exactly.
A killer lineup as usual.
Yeah, exactly. Mark
Brendan.
Looking at the markets here, we've got S&P futures off about 0.4%. The Nasdaq's off about 0.2%. Yields on the 10-year Treasury, they're down just slightly, about a couple of basis points, 4.22%. So you take a look there. Tom Keene is not here, so I will quote Bitcoin.
Well done.
It is up 0.4%, just below $67,000 per token. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, and Lisa. Pope Francis will address G7 leaders at their gathering in southern Italy. His speech at the summit today is the first for Pope. He's joining the chorus of countries and global bodies pushing for stronger guardrails on artificial intelligence. He argues that a technology lacking human values of compassion, mercy, morality, and forgiveness is too perilous to develop unchecked. Yesterday at the G7 summit, President Biden was asked about his son, Hunter Biden's recent gun conviction.
I'm extremely proud of my son, Hunter. He has overcome an addiction. He's one of the brightest, most decent men I know. And I am satisfied that I'm not going to do anything. I said I abide by the jury decision, and I will do that, and I will not pardon him.
Compared to a pardon, which basically terminates the criminal penalty, when asked if he would commute his son's sentence to reduce it, the president replied no. Former President Trump returned to Capitol Hill yesterday for the first time since the January 6th riot. The presumptive GOP presidential nominee met with Republicans in Congress and said they were unified ahead of the election. Senate GOP leader Mitch McConnell, who once called Trump morally responsible for the Capitol attack, spoke for the first time in more than 3 years.
We had a really positive meeting. He and I got a chance to talk a little bit. We shook hands a few times.
And former President Trump says it went well.
We have great unity. We have great common sense. A lot of very smart people in this room and a lot of people that love our country.
The presumptive Republican presidential nominee is also making a big promise to the business community. Trump says he'll cut the corporate tax rate to 20%. Round 2 is underway at the U.S. Open at Pinehurst. Patrick Cantlay leads at 5 under, but he has yet to go out. Rory McIlroy, who was tied for the lead, fell back a shot through 4. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Mike LaBarre, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. I'm looking at the Bloomberg reporting, David, the G7. The Pope is coming.
Yes, I think President Biden meeting with the Pope today.
Okay, so Pope Francis landed in a white helicopter on Friday at the annual Group of Seven summit, the first ever pontiff to attend such event. But I guess
he went there. They didn't come to him. Yeah,
it's kind of his turf.
Close by.
It's kind of close
Signature
by.
white helicopter. I like that as well.
All right, so I mean that hasn't happened before, but again, when it's in Italy, I guess it's
I wouldn't say one in Rome, one in Puglia, I guess.
One in Puglia, yeah. Anne-Marie Hordern is there. She drew the short straw for Bloomberg News at Bloomberg Television. She's been doing some great reporting there, keeping us up to date on what's happening, the G7. And again, you mentioned that the photo op to start this thing, a little awkward.
A little awkward.
For
as Margaret Brennan's saying, now the kind of second-tier countries traveling there to meet with.
Yeah.
I don't mean to be offensive. But
no, exactly.
Not the 7.
S&P 500 off 0.5% here. The NASDAQ off 0.25%. We'll have more coming up. This is Bloomberg Surveillance. Good morning.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we saw futures falling after more records for the S&P 500 yesterday. Right now, S&P futures down 0.4%. Dow futures down 0.7%, or 287 points. NASDAQ futures down 0.2%, or 45 points. We have the 2-year yield 4.68%, down 1 basis point. The 10-year yield 4.22%, down 2 basis points. We have spot gold higher at $2,330 an ounce. Brent crude $83 a barrel. WTI crude $78 a barrel. We have shares of Tesla up another 1% after investors voted for Elon Musk's compensation package and moving the company's state of incorporation to Texas. Then you have online fashion retailer Shopify up 1% after Evercore raised the company to outperform from inline. And not sure if you've been to one, but restaurant chain Cava, they've been called the Mediterranean Chipotle. They're doing pretty well, actually. It's soared more than 300% since its IPO a year ago, giving it a market valuation of over $10 billion. That is your Bloomberg Business Flash. Paul and David.
It's valuable hummus.
It's
I guess.
really good.
I've
never been. Have you?
Oh, it's so good.
Yeah.
Is it?
Yes.
Yeah, I think
Full of
when I was
flavor.
living in D.C., it started there, I
Okay.
think, and it's now spread. But it's you can go down to Bryant Park and if you
All right,
want.
very good. I'll check
They'll
it
let
out.
you out of here.
Yeah.
I don't know.
I'm a Chipotle fan, so we'll try this Cava thing. We'll see how it goes. All right, David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're here in our Bloomberg Interactive Broker Studio. I'm looking at this WIRP function, World Interest Rate Probability, kind of looks at the Fed funds futures and kind of get a sense of what's the market's pricing in for interest rates. And looking at about a 67% chance of a rate cut in September, over 80% in December. So still some optimism out there for rate cuts. Is that all the market needs to move higher? I don't know, but let's talk to somebody who does this stuff for a living. Ann Rathbun, she's the CIO of CBIZ Investment Advisors. And as you take a look at this market here and you think about what we heard from the Federal Reserve this week, what we saw from some of the inflation data, what do you think our Federal Reserve is going to do this year?
Good morning. Well, last Wednesday, I guess 2 days ago, I think they had a chance to look at the CPI print that came in the morning and a chance to revise their view, but it still came out pretty hawkish. And it was kind of fantastic or unbelievable to see the markets hit a high when the Fed came out hawkish. So that was an interesting day. I think that they're going to need more of softer data in both in the labor market as well as inflation print in order to be able to cut more than once, more than what they were telegraphing on Wednesday. It's because they need to make sure that the momentum is there toward 2%, not just the levels. And they need to have a higher conviction of that momentum in order to be able to cut. Once they cut, there's no going back, right? They can't suddenly raise again because that is basically admitting that they've made a mistake.
How much of this is to you noise at this point in time? Paul bringing up that function, we see these probabilities, they're shifting all the time. First it was 3 cuts, then it was 1. How do you kind of in a clear-eyed way look at your portfolio, look at investments, and not be distracted by that? Yes, of course, it matters what the Fed does and is going to do here in the months to come, but there are other things to look at, and sort of how do you weigh all of that versus what the Fed's deciding and doing?
Yeah, so I mean, if you go from just about less than 6 months ago, 6 rate cuts down to 1, and then up to 2 when the CPI print comes out, you know, it was a slight miss on the downside. It wasn't anything astronomical. Then you know that the market is uber sensitive to all of these things. We've always held the position that the Fed is going to err on the side of staying higher for longer because inflation is front and center, not necessarily growth. So between the two mandates, employment and inflation, you know, before the pandemic, it really was growth. Any sign of weakness, they were willing to be dovish. This time around, it's different. Inflation is front and center, and therefore they're going to pay attention to inflation even if the growth numbers soften. So we've always held the view that they're going to err on the side of higher for longer. And so we were thinking about 1 cut in December for several months now, despite the fact that the markets have been going all over the place.
Anna, in terms of fixed income here, where are you focusing or where are you talking to your clients about here? Is it focusing just on, you know, the credit market and I mean on the treasury market and just figuring out duration, or are you trying to take some credit risk here as well? What are you talking to your clients about?
Yeah, so duration, we've been short. We've been short for a long time. We've increased duration. Let's say the benchmark is the ag, toward the ag, but we're
Bloomberg
certainly
ag.
not at the ag or, beyond it. In terms of credit, spreads are very, very tight. So if you have cash to put to work, it's very difficult to actually say, yay, let's go in. But at the same time, the yield, the total yield is very attractive. So if you're investing for income, it's still an attractive place to be because underneath it's really that treasury risk-free yield that you're actually clipping, right? In terms of clipping coupons. If you're going for total return, we do say there's going to be some price volatility, but there is enough cushion in the income to be able to sort of take that shock a little bit.
Anna, we've talked a lot today just about the inflation side of the Fed's mandate, but I know that CBiz and you have kind of a particular insight into the employment picture. And I wonder what you're seeing in the research and reports that CBiz is doing versus what we're getting from the government. Are there things that pop out to you or stand out to you that you think we should be aware of, indeed maybe policymakers should be aware of as they look at that part of the picture?
Yeah, so there's a lot of discrepancies in the labor market report. I mean, even between the BLS, the job number that we got on Friday, that's a 40-page report. And if you look into it, there are a lot of bifurcations, especially in the establishment survey and household survey, which we've been talking about internally for more than a year now. You look at the JOLT survey. And then, of course, CBiz has a small business employment index survey. And when we look at the smaller businesses, they're still hiring, but they're also holding on to their staff, even if they're not fully utilized. People have trauma. We have PTSD from just a few years ago when we couldn't find people. So there is this false sense of labor market is strong narrative because maybe they're not all being utilized. And if there is weakness in the economy, they would be the first to be laid off. So I think there's more risks that are built into the labor market than the aggregated data that we all look at are telling us.
Anna, do you think the Fed appreciates that kind of nuance there?
I'm sure they look at it. I'm not in the room when they're discussing, so I can't really tell you. But I hope they are looking at it. But, frankly, markets trade off of the headline data. There was a report out, I cannot remember who, but there's a report out basically saying that all the revisions, the downward revisions that we've had in the BLS numbers, markets are not trading off of those things. We're not going back and saying, oh my goodness, this was revised down, let's, sell. We're not doing that. And I'm not entirely sure exactly how much the Fed is looking down into the nitty-gritty details of the labor market. The beige book is anecdotal, right? So they're paying attention from that perspective, and that is definitely bottom up. But there tends to be, in my view, a tendency or a bias toward the top-down data.
I'm having a great time filling in. And one of the things I'd like to do, Paul, is kind of like see what the theme is over the course of these 3 hours. And Anna, let me just ask you about one that I think is materializing here. We were talking a lot about the Magnificent Seven and these other big tech plays. And from what we've heard from other guests, it's that they're going to continue to be big, they're going to continue to be leaders, and folks aren't really running away from them. Are you in the same camp as well, that there might be other opportunities in equities, but they still are going to be kind of lodestars for you in the months to come?
Yeah, AI is hard to fight against. They used to say don't fight the Fed. Maybe they still say that. Right now we're in a phase of don't fight AI, right? But we know, I think everyone knows that we have proof of concept, but we don't have the full detailed application of AI yet. And that is being worked on. And I think that's what the market is pricing in, honestly. It's not just the hype of AI, but what is to come in terms of the application. And frankly, we're not talking about small startups necessarily it wouldn't be in the S&P 500 anyway, but IPOing that the public markets are trying to price in. We're talking about large companies that are incubating these ideas, right? And those large companies have a lot of cash flow, and they don't have much debt, to be honest. And so they're not even really sensitive to these interest rate changes. So I think there is something to be said for the future that the wisdom of the masses are seeing in terms of the application that maybe individuals are not seeing.
All right. Hey, Anna, thanks so much for joining us. Anna Rathbun, CIO at CBiz Investment Advisors. Looking here at the futures market, we're just about to get this market open for you. We're off about 0.4% on the S&P 500. The Dow's off about 272 points at 0.7%. The NASDAQ off about 0.2%. So a little bit of a weakness here in the futures. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Paul Sweeney and David Gura with your opening bell report. So can we make it 5 days in a row for record for the S&P 500, NASDAQ 100? We did get some more economic data coming out this morning. May import prices, they were down about 0.4% month over month after rising 0.9 the prior month. In about a half hour, stay tuned. We'll get you that University of Michigan sentiment. We are off and running. We'll start with the S&P 500. Well, we're down 0.3%, down 16 points at 5,417. Over to the Dow, down 0.5% to 204 points at 38,441. And the NASDAQ down 0.2%, 47 points at 17,620. The two-year yield, 4.69%. That's down 1 basis point. The yield on the 10-year, 4.22%, and that's down 2 basis points. We'll check in with commodities. We have spot gold higher, 2,326 an ounce. We have Brent crude, $83 a barrel. WTI crude at $78 a barrel. At the open, also want to check in with Adobe. We've been talking about it all morning. Their shares up 16%. That is your Bloomberg opening bell report. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura, sitting in for Tom Keene, and I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. I'm looking at the two-year Treasury. David, we were just at 5% a little while ago, and here we are down at 4.68%. So we've had a big move down in yields, and we had a busy economic week with all the inflation data, the Fed. Today we're going to get at 10 o'clock Wall Street time, UMich sentiment stuff. That's not just a good football team there. They have some good economists, so we'll pay attention to that. Our next guest is going to help us put it all together. Bridge Karana, Senior Managing Director. I didn't know they had that. They didn't have that in my day. You were just a managing director or you weren't. But they have Senior Managing Director, Fixed Income Portfolio Manager at Wellington Management. Those are the smart folks and nice folks up in Boston. Hey, Bridge, thanks so much for joining us here in studio. What did you take away from some of this economic data we saw this week in terms of inflation, in terms of maybe how the FOMC and Fed Chairman Jay Powell is positioning the Fed?
Yeah, first on the inflation front, I do think it was a really good print what we got on Wednesday. So, the headline number, certainly on a core CPI basis, was the lowest we've got in 8 months. I think the most important part, if you look at core CPI and you take out the shelter component, we actually had deflation for the month. And if you look at it even on a year-over-year basis, it was only 1.9%. So really back to where we were pre-pandemic if you strip out shelter. Now, shelter's the largest component of the CPI bucket, and that's still running very hot at about 5.7%. But there's, and we do think that's going to continue to come down based on where we're seeing new tenant rents coming in. But it really begs the question, should the Fed really focus on this most lagging part of the CPI index when the rest of the index, as I said, to strip out shelter, we actually had a deflationary month on the core side. So, I do think that's what they're struggling with. I think that is what we saw on Wednesday with the Fed as well. I think optically it looked hawkish, right? You went from when I was last here in March, we talked about them saying 3 cuts for this year, and now we're only talking about 1 based on their median expectation. But at the same time, I think what the markets are figuring this out. I'm not sure people are talking about it, is that if you look at the summary of economic projections, they basically sit at the end of the year, we think inflation is going to be about 2.8%, and we think the unemployment rate is going to be 4%. Guess what? That's where we are right now. And so the point is that based on their measures. And so that raises the question, if inflation comes down more or the labor market deteriorates more, then that 2 that's priced in for this year is pretty reasonable.
Psychoanalyzing Fed policymakers is a dangerous game, but one that keeps us in business. I'll acknowledge that. But what is your sense of what they want at this point in time? So you had Fed Chair Powell tipping his hat to the fact it was a good read this month, but wanting more. What is the more that he wants? What is the kind of trend or collection of reports that's going to make him and his colleagues have the confidence to begin cutting?
Yeah, I think it's just about time more than anything else. And so, we had the last 6 months of 2023, really good inflation data. That's what gave them the confidence to pivot in October, and we saw a pretty substantial bond market rally from there. And then we had the first quarter of this year where inflation was just much too hot. And so I do think that they need more time. I think, July, I don't think there's going to be a cut, largely because they're only going to get 1 more inflation data and 1 more unemployment data. But I do think that September is certainly a live meeting. If inflation continues along that line. But, I think one thing I talk to clients a lot about, or they say, when should I get out of cash and move into bonds, And most people are trying to wait for the Fed to cut to say that's the signal to start buying bonds. In my view, when the Fed should be cutting because the data is slowing, but they're not, that's actually a good time to buy bonds because they're reinforcing the negativity of the cycle. And I think that's where we are right now. The data is coming in slower, and the Fed is not easing, which I think they arguably should.
In the fixed income space, do I just stick in the treasuries and clip those coupons, or do I take credit risk? How are you guys thinking about that?
So, I think if you look at credit spreads, they are extraordinarily tight. So if you look at the high yield market or investment grade market, we are looking at spreads in anywhere from the 5th to 10th percentile throughout history. And, I do think the default rate is starting to move higher. It optically doesn't look that much higher, but if you include things like distressed exchanges where, bondholders get primed, that figure moves up to about 5% of the high yield market. And with spreads in the low 300s, I don't think you're very compensated for high yield risk at these levels. And so I do think duration overall is attractive. It's really a question of where you find those bonds. I think, treasuries are certainly attractive, but I do think that inflation-linked bonds, particularly in the U.S., are quite attractive. The U.S. real yield or TIPS. Yep. There's break-even levels of inflation priced into the market are very low at about 2.2%. I think over the long term, it's probably going to be higher than that. And I also think that, as we evolve throughout the summer, people are going to have the election on their mind more. And what does, if we do get one-party government, what does that mean for the fiscal situation? And so I do think people could almost crowd into inflation-linked securities. They want the duration, they want the treasuries, but they want a little bit of inflation protection as well.
When you look at fixed income more broadly, at sovereigns, like what else is appealing or interesting to you? We were talking earlier about how the Fed has this moment to kind of wait and watch and see what the ECB does and the Bank of England does, and that'll give them maybe a stronger sense of sort of how this might play out when they finally do begin to cut. But as you look more globally at bonds, what's appealing to you right now?
So we definitely think there's attractive parts of the global fixed income universe. When I think about countries we're looking for, some of the characteristics we like. So low levels of government debt, not persistent fiscal deficits, like quite frankly we have in the U.S. Actually high levels of consumer debt. And what that means is that the central banks, and also variable rate mortgage markets. And so what that means is that the pass-through to policy rates starts affecting consumers quicker than we are experiencing in the U.S. because we have all locked in our mortgages at very low levels during the pandemic. Yeah, exactly. So the pass-through to policy rates effect on consumers, it will just be much quicker. And so it's really canvassing the globe, looking at countries like Australia, New Zealand, Sweden, Norway, countries that aren't on people's typical radar, but that's where there's a lot of value in bond markets.
How about are there industry sectors that you like in your portfolio right now? Is anything screens well for you?
From a credit perspective, I do think that right now spreads are just overall tight, so we're de-emphasizing credit broadly. I do think that right now, if you look at the European situation, we'll see what happens with the French election, and that's creating a lot of volatility in financial spreads in Europe right now. I do think over the longer term, financial spreads do look attractive. There is, particularly in Europe, I think that, once we get through this noise, you're looking at companies that have had earnings power that they haven't seen. Capital ratios have been improving for the last decade plus, and they're finally in a normal yield curve environment. So European banks are quite profitable right now. And so certainly there's a setback to that in the last few weeks, but over the longer term, that is probably a very attractive sector.
I wanted to pick your brain a bit about what's happening in France and sort of how we talk a lot about navigating this election season here in the U.S., but in France you have this kind of radical move to have a snap election in 3 weeks, and we've seen the sell-off, of course, in stocks in France today. How do you begin to navigate all of that? What does it tell you broadly just about geopolitics and the macro environment, and sort of how do you think through that as an investor?
Yeah, it's really tricky and quite frankly disappointing in the sense that, I do think that Europe was on the cusp of a really strong growth outlook this year. So last year, they didn't have enough fiscal, again. This year, that you're going from, that was likely to add about 0.5% to GDP. At the same time, inflation was really much higher in Europe than the U.S. last year, almost 2 percentage points higher, and now it's lower than the U.S. And so once again, real incomes were starting to improve. And then I already talked about how the banking sector, was not constraining the credit the way it historically had for the last 10, 12 years. And so they had all of these positive disinflationary growth Goldilocks setup. And so now you have this political situation in France, which could disrupt that. My sense is that even when if you knew the outcome of the elections, it usually doesn't, it's the effect on bond markets or market prices are very different than what you think. And so we're trying to think longer term. I do think that, while this is certainly a blip, I think that the European almost disinflationary growth story is there for the longer term. And so trying to invest for a longer term perspective.
Makes sense.
Bridge, thanks so much for joining us.
Great to
Bridge
see you.
Gura, he's a senior managing director, fixed income portfolio manager at Wellington Management Company up in Boston with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, David, and Lisa. Pope Francis will address G7 leaders at their gathering in southern Italy. His speech at the venue today is the first for Pope. Now, before flying to the G7 summit, Pope Francis hosted a very different audience at the Vatican today, celebrating the importance of humor. He welcomed more than 100 comedians from 15 nations, including U.S. celebrities Whoopi Goldberg, Jimmy Fallon, Chris Rock, Stephen Colbert, and Conan O'Brien. Francis told the comedians, in the midst of so much gloomy news, immersed as we are in many social and even personal emergencies, you have the power to spread peace and smiles. Meanwhile, G7 leaders also turned their attention to migration on the second day of their summit. Yesterday, President Biden and Ukrainian President Volodymyr Zelensky signed a bilateral security agreement between the U.S. and Ukraine. Biden says leaders of the G7 have agreed to work out a big loan to help Ukraine in its war against Russia.
This week, the G7 signed a plan to finalize and unlock $50 billion from the proceeds of those frozen assets, to put that money to work for Ukraine. Another reminder to Putin, we're not backing down.
Meanwhile, President Biden's competitor, former President Donald Trump, made his first visit to Capitol Hill since the January 6th riot. The presumptive Republican presidential nominee is also making a big promise to cut the corporate tax rate to 20%. Bloomberg's Ed Baxter has the story.
This is a pitch to corporate CEOs, about 100 of them, as well as House Republicans. He said a cut from 21 to 20%. He says it'd be offset by future tariffs. And even a small reduction, of course, means billions of dollars for profitable companies. He also vowed to make permanent the sweeping 2017 tax law. As for the GOP itself, his theme?
We have great unity. We have great common sense. A lot of very smart people in this room and a lot of people that love our country.
Also promised to again slash regulations put on business. Ed Baxter, Bloomberg Radio.
Round 2 of the U.S. Open is underway at Pinehurst. Patrick Cantlay leads at 5 under, but he has yet to go out. Rory McIlroy, who was at the top of the leaderboard as well, slipped 2 shots back through 6. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
Michael Barr, thank you so much. We appreciate it. How's the real estate market in Brooklyn these days?
Tight, but I think we saw a lot of townhouses selling during the pandemic.
Right.
Now they're more expensive and rates are high, so they're not selling. But inventory is very low.
Yeah.
Very hard, both to rent and to buy, I hear.
The young folks, the rentals are only 1-year leases. We didn't have that back in the day. We had 2- and 3-year leases.
And there's the constant fear it'll go up after that.
And now the kids, they're in a constant state of looking for an apartment. It's unbelievable.
Good friend of mine was looking for one in Brooklyn, was so put off by what he could get for what he could pay. He's now moved. He's left.
Yeah.
Western North Carolina, where you can definitely get a lot more.
You can, but it's just like that's where everybody wants to be.
Yeah.
Is in Brooklyn, and it is a tough. And people talk about the owner's equivalent rents and all this stuff. You just don't experience it here in New York. It's just up, firm. It doesn't ever seem to be a break here. So we'll take a look at that. The real estate market in Greater New York City. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got red on the screen on this last trading day of the week after really a great ride for the S&P 500, NASDAQ 100. Right now, we'll talk about the S&P 500 down 0.2% or 13 points at 5,420. We have the Dow down 0.4%, 162 points, 38,483. And the NASDAQ down 0.1%, 22 points at 17,645. We have the two-year yield 4.69%, down 1 basis point. The yield on the 10-year 4.21%, and that's down 3 basis points. Shares of Tesla, well, they're up just a fraction, about another 0.2%. This is after Elon Musk's pay deal proposal to move Tesla's legal home to Texas won that investor approval. And then you have shares of luxury furniture retailer RH. They're down about 15%, really taking a hit after reporting a heavier than expected first quarter loss. And finally, online fashion retailer Shopify up nearly 3% after Evercore raised the company to outperform from inline. That is your Bloomberg Business Flash. Paul and David.
All right, thank you very much, Lisa Mateo. We got David Gura sitting in for Tom Keene, and I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. So, I used to live in North Jersey, and right across the street was the Short Hills Mall, which is just
famous.
Fabled. It is just, it was packed. It's packed all the time. I mean, and people were talking about the death of malls. I'm like, not where I look. I mean, I would never set foot in there, but everybody else in the tri-state area
preempted me.
does.
Yeah.
But I mean, I don't know how to think about this, the whole retail business. Now everybody's kind of shopping online. I don't know how this whole thing works. Anjee Solanki, she knows how this stuff works. National Director of Retail Services for the U.S. for Colliers. Anjee, give us a state here. Now that we're, thankfully on the backside of this pandemic, and maybe consumers are getting back to normal behavior, if you will. Talk to us about how, the balance between, having the bricks and mortar store kind of works with the e-commerce side of the retail equation. How are retailers making that balance these days?
Oh, it's a great question, and thanks for having me. Honestly, it's really working well. They're really both integrated. So retailers right now have invested quite a bit of money over the past, call it 10 years, as it relates to the infrastructure for online. So they really are harmonious. We're seeing, online sales from most retailers, roughly around 18 to 20% is online, whereas in store still is the dominant place to sell. People still want to touch, feel, smell, and be educated. So I think, brick and mortar is far from being completely, forgotten.
When you look at how retail is navigating this macroeconomic moment, what are companies prioritizing? I know there was this push for expansion. Has that been scaled back? So how are they thinking about growing that footprint in the way that you're describing, both with brick and mortar and online as well?
Definitely. There is definitely still a high demand as it relates to, site expansion and growth. As you look at the very mature brands that are out there that have been quite successful year over year, they're continuing to look at the U.S. as a great opportunity for more sites. And, in speaking to a lot of these brands, they're looking at not just 50 locations, some are looking at 100 per year. And so when we're seeing that, and most of those segments are going to be your junior boxes, your big box type tenants, your grocery, those are, call it more mainstay staple, sectors within our industry. And therefore, we're really going to continue to see that. But the challenge is that we have a lack of supply. The lack of supply is really what's hurting us because there hasn't been, call it new construction, and a growth in new construction throughout the U.S.
So I guess on the other side of the equation, how is the consumer doing? What are the retailers telling you about what the consumer's buying, how they're buying, how much promotion they need to buy? What are you seeing out there these days?
Yeah, it's been a really interesting kind of a little bit of a mixed bag. We are seeing a bit of a gradual slowing. We anticipate that when we forecast for the end of the year, that will still be slightly up. compared to last year. However, we are going to see a gradual slowdown. Now, the areas that we're going to see a slowdown, we're going to see some slowdown, of course, in high luxury spend. We are still continuing to see a good spend in the discount category, but people are really paying attention to where they're placing their dollars. So even though we're seeing, spend occur in, the health and personal care, we're starting to see a bit of a slowdown in, call it, beverage spend, F&B spend. Prices have increased in that sector purely because wages have increased. I think the overall wage increase has been roughly about 4%. So people still are making a healthy or decent amount of money, but they are being very cautious on where and how. But we are seeing one interesting thing, and that is in the entertainment sector. So people still want to have that joy and that experience. So when we stop and think about the concerts, there's been plenty of concerts that have been going on, but the cost of a concert versus the cost of going to either, whether it's just going out for a small dinner with friends or to see a movie, even though the movie industry, the cinema industry is still, softly kind of treading here. People still want to have this kind of entertainment experience.
I want to ask you about where you're seeing growth, and I'll confess I read a few of your notes before coming in here today, and Paul, at least having some fun talking about Brooklyn, but you highlight the fact that Fifth Avenue in my neighborhood in Park Slope, Brooklyn, one of the great retail stretches now in the country, which makes me so happy. And part of that are these kind of boba tea shops that are set up and constantly packed with young people. My daughter, this is a big deal now. So talk a bit about you don't have to talk about that stretch in my neighborhood, but where we're seeing growth in retail, both in terms of geography and also sort of where there's opportunity in food, in beverage, that's a little different from what we've seen before.
Yeah, it's been really fascinating on the beverage side. So I think, what people are starting to realize, and of course, it's the younger generation, that, alcohol doesn't have to be the beverage of choice. And so we're starting to see these very diverse type uses start to expand throughout the U.S. And it's very interesting to see kind of that culture around it. So boba tea is one. We actually were working with a group called Swig. And if you look at Swig, and I think one of, there was a tagline, dirty sodas. Well, you stop and think about it, it's really a soda mixed with whether it's lemonade or a different type of juice, or different types of, add-ons. And it's really become a great way of kind of, introducing something unique and different, but enjoying it with your friends and socializing about it. So the trends that we're seeing in the beverage side have been, really embraced by the younger generation, and I don't see a slowdown. So whether Starbucks is selling boba teas now, and it's been one of their stronger segments within the product business. So is it a fad? Is it a trend? I think it's probably going to stay if we continue to see this cultural diversity. So we're going to see more of that. So stay tuned. I'm really interested to see what's happening there.
Anjee, the next question is for Lisa Mateo. How is luxury doing?
Yes. It's so fascinating. I'm going to bring it right back to New York for a moment. But, look, LVMH, they're going to take down their building on 57th and rebuild. There's definitely a gradual slowdown in terms of spend. But you have to kind of look at that number based on they had such a significant uptick, during the pandemic and shortly thereafter. So when we say, a gradual slowdown in luxury, they're still, still up compared to pre-COVID numbers. Look, luxury still, they're expanding, they're buying buildings or, their own real estate. They want to own their kind of longevity and where they're going to be for, the next, call it 30 years versus trying to negotiate and renew.
Right.
They just have to negotiate with themselves. So we're going to continue to see, that market be strategic in placement and where they expand.
All right, Anjee, thank you so much for joining us. Always appreciate getting your perspectives there on all things on the retail space there. Anjee Solanki, National Director of Retail Services for the U.S. The firm is Colliers. So I'll be walking past some luxury when I walk to Penn Station this morning down Fifth Avenue. one of my favorite tunes out there, Summer Wind by the Pride of Hoboken, New Jersey. Frank Sinatra.
And walk with me all summer long. We sang a song and then we strolled that golden sand. Two sweethearts and the summer wind.